I'm so glad I didn't get wrecked by FTX. I wonder if anyone here did.
Yeah, yeah, that was left field, but always me. I'm so wary of exchanges ever since that, bro. Most my like BTC, big
Same,
ETH, everything's off exchange. I only keep on exchange what I'm gonna trade with.
same,
Can't trust
same
these,
here,
man.
man. Like I just keep private wallets, different exchanges, and then yeah, what I'm trading on my leverage account will be what I use for my margin and stuff.
Yeah, yeah, exactly. Everyone used to say when, especially when it's like back even in the last bull run, everyone used to keep saying like, not your keys, not your crypto. But I feel like for most people that didn't really sink in until FTX happened, and once FTX happened, you really got the meaning of, oh, damn, that's what it means. Um, Tomorrow, yeah, okay, sound okay. Well, let's get this going. We'll start with the usual, but I'm not gonna spend long on these whatsoever because nothing much has changed since last week's, right? So Dixie, holding the 382, right? So we said this is the one thing I really want us losing on the Dixie. For now, we've gone to the 382, we've held it. So if I do this now, we've got a new area to look at right over here. There we go. Right, so last week we were saying as long as we're holding the 382 on the macro, Dixie's still fine. But this is good because last week's close confirmed what we were talking about, which is let's get the breakdown right back below our old range highs, right? So this was the liquidity rate back in 2023 of your true range. So then we now just take that as our full range, right? So we've broken back into that range there. What was once resistance for now is still support in the case of the 382. But even if we hold here, what we're now looking for, what we described last week is let's go back up and put more distributive structure in on the Dixie, right? We've got distributive structure in at this level. Now let's carry that on and get follow through and get distributive structure around here. If you can do that, I would expect the 382 to not hold the next time around and maybe go back and check back to the next diagonal, so on and so forth. And if you get back below the black line, then you're within your true range, and then you'd really be targeting the lows, right? Anywhere between 100 to 99 Dixie minimum is what I look for. But for now, very very simple. Your line in the sand is the 382, 106.614, right? The level we were talking about last week. This is the same level that's been on the screen for like the last couple of years, right? Because this is the macro fib retracement. The 380 is what you're holding for now. As long as you're holding this, you're going to keep chopping, right? As long as you keep holding this, it doesn't matter if you distribute here, you're going to keep chopping. We need a loss of this level after distribution to confirm if it's going to go down or not. So that's just the follow through from last week. Nothing's changed apart from the fact we do have the weekly close that's taken us back within our range extremes, right, in terms of our previous hold range. So if we can distribute to this area, then ultimately I would be looking for Dixie to then go back down again, which you guys know that is one of the precursors that I'm watching for that full-blown euphoric old season, right? So I really want this distribution to play out on the Dixie, right? Something like this over time. Go back down. USDT dominance still chopping below the 6 month 0.5, which is good, right? You're not above your 3 monthly resistance, which is also good. We know this is a monthly seller zone area on the monthly where time and time again we can see sellers just keep taking control. We're still rejecting off that level, right? We rejected off the 6 month level as well. If you go to the 6 months, there is your area in the 6 months where sellers were in complete control in history, right? So you're rejecting off the mid of that still. On the weekly, all you're doing right now is trying to close candles above your range over here, right? So the range that you have put in on the USDT dominance chart, which has been your loss of the line of best fit slash bounce from the range extreme, you're trying to flip those range highs. But as long as on the monthly and on the higher time frame, on the weekly, so on and so forth, you do not start closing candles like we've been talking about above this zone especially, right? Above the mid of the 6 month seller zone, above the mid of your monthly seller zone. As long as you don't claim that, this is still resistance, right? So even though yes, you've closed above your local range highs, I wouldn't actually look for any higher. This is your liquidity grab. Eventually, I'd look for lower, right? But if you go and start, like we said, the scenario is not changed. As long as if you go and start doing this, then ultimately I would actually look for, in my opinion, you'd probably get a deeper wick than most people think, and probably go tap somewhere around these highs again, take out these highs before actually going back down. Right, so the scenario I do not want playing now is us going to reclaim and doing this, because if you do that, that's going to be a lot of pain on Bitcoin. Now, even on Bitcoin, I think that move up is going to be met with some nice pull downs, like low 80Ks, low 70Ks, in my opinion, if we go this high on Bitcoin. also just going to get hammered that much harder if this happens, right? So let's hope that doesn't happen. Um, if we do see signs of this being flipped into support, right? Especially if wick into the fair value gap, you come down, but then this start being flipped into support, I'll be exiting, or not, maybe not fully exiting straight away, but I'll be severely de-risking not just leverage plays, but even my spot bags, right? Because I don't want to be holding spot for no reason as long as we're above this. Because if we do this, it's not just going to be leverage that suffers, spot's going to be suffering as well, right? So if we do this, that's just going to be a trigger for me to de-risk. Because at the end of the day, right, if it does this, and let's say it's consolidating above here, you're getting successful closes above the levels we don't want, being turned back into support, and we de-risk our spot bags, but then you start to get some bearish, like engulfing counter straight back to the downside, then it's very simple. You just re-enter your spot plays again. Realistically, that's not going to affect your spot entries that much, right? But I would much rather you guys be safe, right, than ignore the warning signs. That is, if USDT dominance does go and flip this into support, that's a serious warning sign that if you accept back into this range, then this move is very, very likely. Right? And if you ignore that and you keep holding on to spots stubbornly, then there's just a higher chance you're going to get burned, right? So if this happens, in my opinion, if you're not comfortable fully closing because you still think this is just a liquidity grab, whatever, but at least make sure you de-risk so that if you do get this move, you're not absolutely just shooting yourself in the foot, right? I'm going to be heavily de-risking spot if you do start flipping this, and I'll simply re-add whatever I de-risked if if this whatever price action that builds in here that is looking like a flip of resistance into support gets neglected, whatever spot entries I got rid of, I'll just re-enter again, right? I don't care about, again, having perfect bottom tick entries. What I care about is, am I in the long run going to get my portfolio nuked by 40, 50, 60% simply because I refuse to see the warning signs that was clearly being presented to me, right? So that's something to keep an eye on USDT dominance here, okay? If this starts flipping into support like this, in my opinion, it's it's just a very good idea to de-risk spot, de-risk leverage, at least hedge, right? Even if you don't want to sell anything, hedge so that whatever red you get into is covered by the shorts, right? But that's something. But so far, right? So far, what we have is good. You're not closing above that area, right? You're still below. You're still using the top of your line as resistance. So if that liquidity grab is confirmed and we don't go in, like I said, flip structure bullish, I'd eventually be looking for moves straight back to the downside on USDT dominance, right? Nothing's changed there. Bitcoin dominance, same thing, right? You're chopping, you're at your T1 zone, your terminal 1 zone. So for this harmonic, this was your first area. This is your first target, basically, right? If you were to take that low to the high, basically, your T1 zone was right over here. So this is your first area where you're looking for a reaction, right? So with this bearish harmonic, if this does end up being a type 2 return and the type 2 retest is successful, right, you create a lower high or you create bearish divergence, anything of the sort, you go maybe put a higher high in price, but that is met with lower high on the RSI, on the daily, on the weekly, so on and so forth, right? Then for me, that'd be even stronger sign of continuation to the downside, right? But this is now the reason you're bouncing here, apart from the obvious fact of this used to be a demand zone in history, right? So this is a mitigated liquidity pocket right over here. You're reclaiming the top of that back into support. Is also the fact that you had your terminal 1, right, your T1 level / zone for this bearish harmonic in this area. So this is now your first target has been hit. You're getting a reaction, right? This is just your box standard technical analysis / price action, right? Again, I'd be looking for some sort of type 2 return, and ultimately I'll be looking for that type 2 return to confirm whether, like I said, weekly bearish divergence or rate some highs but close your candles back below these highs to confirm that yes, the area where your harmonic completed is still resistance. If that happens, then I'll be looking for a deeper pull down towards T2, so on and so forth, right? But now if you go and start flipping this area into support, then we probably get that move higher like we've looked at before on Bitcoin dominance, right? Go higher and flip that fair value, maybe go higher and actually fill, that fair value gap, get that 1.618, right? So again, we're not surprised this level is holding. We have we've looked at this the last couple of streams as well, but we have the T1 zone in this area, and we also have, if you look at the monthly, your monthly seller zone in this area, right? So an area where sellers were in control in the past. Currently, buyers, you're coming to test that area from the top side, meaning until proven otherwise, this is for now support, right? So you add a very reactive area. So we won't be surprised if we do get one more move up from this. But like I said, if you do get this, I would want that fill into that fair value gap to be met with lower highs on RSI, right? So then you get that bearish uh, divergence on the weekly, so on and so forth. That would really tell you, like, there's buyer exhaustion going on the Bitcoin dominance chart, right? And then you'd be looking for your move down, perhaps, like even more confidence in actually saying Bitcoin dominance look topped out, right? Um, right now there isn't enough confluences for me to really say Bitcoin dominance has topped out, right? There's no, like I said, there's no signs of a bias weakening. There's no signs of bias strength fading yet. Yes, you've rejected off key levels, but market structure is still intact. There's been no distributive structure, right, to speak of yet. Therefore, I don't see any reason to be calling a top on Bitcoin dominance, right? I think this could definitely push higher. We don't have enough yet to call with chest, for me to say with chest, like, yeah, Bitcoin dominance is topped out. Not yet, right? So let's see how this plays out. But we do have a very nice target up here in the form of the 1.618 for this ABCD and the 2-week fair value gap that we've looked at, right? So for me, this would be the next target. If you get above this, like I said, I think you're going to 2% plus on Bitcoin dominance. But for now, this would be a next main target. Should we get more spikes up on Bitcoin, right? So we'll keep an eye on this and see, over the weeks how this progresses. Ethereum dominance, same thing. You've not hit your 886 yet, right? I would want to see one more spike down on this to actually hit the 886. I think that'd be perfect price action. But if we don't, then it's close enough to 886 here, right? This is like very, very close to an 886. So I wouldn't be fussed even if we didn't get it. But with Ethereum dominance, one thing to look at, and one thing we were talking about last time, is the fact that if, there are areas where, as long as you can maintain your candle body closes, especially within / above the bottom half of this zone, right, above 9.13 to 9.93%, you are putting on a macro scale structure that you can deem to be accumulative, right? So you have your initial supports here that came in multiple of times. You have your big radon liquidity that happened back in 2020. You've got your move back up, and now you've come down and you back at the area where your initial support actually came in, right? So you do have, on a large scale, over multiple years, you have a multi-year smiley face currently printing. Now the bottom isn't confirmed yet. We don't have any signs here saying the bottom is in. We don't have structure change, like I said. You don't have any weekly bullish divergence, nothing like that. You don't have a change of trend back to the upside or anything along those lines. But, as long as those do come in at this area, then this is a very logical area for you to be putting that cumulative smiley face in, right? So then that would be a good reason to actually be saying, okay, Ethereum dominance looks bottomed out, right? But ETH dominance back at very, very key areas. If we take a look again, we have a liquidity triangle up here, and based on the harmonic here, right, the bullish bat, the 886, I've drawn on a very crude terminal 1 and terminal 2 zone, right? I actually lined it up with fibs. I just haven't put rectangles in, right? I just did it like this basically. But that would be a first target, right? If you were to get now an impulse back up, and you're going to play this harmonic to your first target, it'd be right this box over here. The second one would be T2, this box up over there. In total, that'd be an 81% increase in Ethereum dominance, right? Which in my opinion would easily take ETH to our $5,000 to $6,000 target, right? For me, I do not think, I've said this multiple times, I don't think we're going to see 10k ETH or anything like this cycle. I don't think that's going to happen. Just in the same way I've been saying, I don't think we're going to see 200k plus Bitcoin this cycle, right? I think what's actually more likely is you probably go, and at the most, I would want to see this sort of T2 hit, right? By the end of this year, let's give it like a crude time frame of December 2025, right? And then actually us have one more move down going into the next halving year, right? So I'd think a slow bleed down again through to about, let's say, 2028. Right? That's for now. That's what I'd actually consider is probably the most likely scenario. We don't go out and go balls to the walls and go 10k on ETH straight away. We go up, have a spike towards that 5 to 6k target, let's say, and then we once again slowly just start bleeding out for the next 2-3 years. Right? And this is of course trying to follow the seasonality of the 4-year cycle and the outperformance post halving year. But then after the post halving year, typically you tend to slow down in momentum in Ethereum, and Bitcoin you start bleeding against Bitcoin again. That's what I think would happen, right? And again, 2028 halving years where I want to see some sort of structure coming in to confirm, like maybe this low, maybe you go a bit lower, rate these lows. I don't really care, but ultimately, whatever structure comes in, I don't want to see some multi-year bullish divergence, and then finally maybe 2029 onwards, right? 2029, 2030-ish, by the end of the decades when you actually break out from this multi-year supply line, basically, right? This is now your target for anyone that tells you ETH is definitely going to 10k. Something like this could very definitely be possible. Right, of course, am I taking liberties in saying this? Of course I am. I can't predict 5 years into the future and say this is going to happen with certainty, right? But I could see something like this happening, right? It wouldn't be surprise me if it did go and we simply just, at a very basic level, just rejected of the supply line again and then came down, right? In terms of now this bullish harmonic, that'd be a type 2 return, right? So maybe you do get that type to return and just have no volatility for for a period of time, right? But then that type to return could give you weekly bullish divergence by the time 2028 rolls around, right? And then you'd be looking for again signs of strength, right? Signs of bottoming out, signs of pairing strength against Bitcoin, so on and so forth, for you to then once again be in Ethereum to try and catch that rotation, right? But currently are areas where you're not going to be fading Ethereum, right? In terms of, and we'll look at this further in a minute. I released something in my channel the other day showing you Sol against ETH, right? Why I think Ethereum was likely to start performing Solana, and you can see right now Solana is absolutely taking a beating while Ethereum's holding pretty damn strong, right? So the chart's playing out for now, but over time, this is something I'd want to see, to be honest, right? Don't give us 10k Ethereum straight away. Just make people just, give us some sort of spike up and just give us that, just bearish ETH narrative again. And then just give us that 10k plus ETH, like, maybe towards the end of the decade or something like this, right? But of course, this could, we could very easily do this breakout retest and just go, right? I'm not saying that can't happen. But for now, for me, the more, let's say, conservative and the more long run approach would actually be a scenario like this. But we'll see what happens. Right, we'll see what happens, because at the end of the day we could very easily break out, and if we start flipping this to support, then of course this thesis goes out the window, right? So for now I'm just giving you guys two macro scenarios to watch for. You're either going to get that breakout retest and you go way higher than people think, or the people who do think you're going to get 10k plus ETH are going to be left just once again holding the bag or whatever if they're too deep into the narrative, and they're going to ignore signs of maybe local distribution that goes on at this resistance, and they're just going to bag hold all the way back down again. Right, so two macro scenarios for me are either go flip this and keep going higher, or actually hit your harmonic targets and then give us a type 2 return, a multi-year type 2 return, right? And it looks like, but it doesn't look like, oh, there's not much space, but you got to realize, like, this from this low, 2019, through to 2025 here. Actually, that's pretty much a 6-year wave structure over here. And you can see it's not really been that volatile, right? This is a 6-year wave structure, so this could very, very well be possible, right? You're just going to see decrease in volatility to really compress that very tightly, right? So for me, that is Ethereum dominance. Where we currently are is not a chart you should be fading, simply because even though we haven't hit the 886 yet, it's been very close to an 886, right? So for me, you could pretty much consider the bat done, right? If we do go and tap the 886 rated, but then close above to actually hit the target, of course that'd be better. But even if we don't, you don't need to get that perfect tap at the 886, right? This is close enough to an 886 for me to warrant calling this actual bat. So, if bottoming structure does come here and, start reclaiming levels into support, and more importantly, the trend shifts bullish, then, like for example, right, let's say the last lower high that led to the lower low, right? If you were to go to the daily or something like this, that'd be right over here, right? The last lower high that led to the lower low. If that was raided and you started putting higher lows in, so on and so forth, then I think that's something to be taken very, very seriously on this chart for now. From the areas where we are, you're not gonna, you're gonna give that precedence, right? Of course, you wouldn't give, things like that precedence when you're rejecting off resistance and when you're not at key levels, right? So for example, there was a lower high, right, that led to a lower low. The trend shifted, but when something like this happens, you're not going to be straight away being like, oh yeah, we could go to an uptrend from here. Why? Because you've not hit a key level. This is the middle of nowhere. This is just noise. But you are no longer in the middle of nowhere. This is a key level now, right? So now trend shift, that any price action that occurs at key levels, you're going to give more weight, more significance, right? So if coming off this level, you now actually see a trend shift, that's to be taken more seriously than anything you've actually had coming down to this level, right? So we keep an eye on that. But if we don't try and you just put on a lower high, and hopefully we go down and get that 886k, one more flush, like I said, maybe put weekly bullish divergence, daily bullish divergence, so on and so forth in, and then you start to, like, bottom out, reclaim, and get the move up. But I think we're very, very close to seeing that. So Ethereum dominance, definitely a chart to pay attention to. Can't be fading this. There was no point looking at this chart, when we were coming down here in the middle of nowhere, so on and so forth. But these particular areas, definitely a chart to look at. So that's ETH dominance, right? And if for those of you that are confused, how would you look at ETH dominance? There's exactly the same way you would Bitcoin dominance, right? So what do you do with Bitcoin dominance? When Bitcoin dominance is a resistance, you try and consider, okay, well, if you're a trader, if you're a day trader, you try to consider, okay, well, clearly, if we are resistance and we don't flip this, Bitcoin's going to be halting in performance for the immediate time frame. So what do? You try to look at other projects that look ready to outperform Bitcoin in that time period, and you try to catch that rotation. That's what you do, right? And when Bitcoin dominance is supports, you don't then all of a sudden decide to sell all your Bitcoin and go heavy into alts. Because if Bitcoin dominance is supports and it bounces, what that's telling you is Bitcoin's market cap is going to go higher, i.e., the money, the slice of the pie that is owed to Bitcoin is going to increase in value, right? So that is not a moment in which you decide I'm going to de-risk Bitcoin and go into alts, right? I.e., when Bitcoin dominance is a support, that's when you look to rotate into Bitcoin, right? Not out of Bitcoin. When Bitcoin dominance is a resistance, that's when you look to rotate out of Bitcoin, not into Bitcoin. I'm talking very strictly from a trader's perspective here, right? On the macro, this is of course still the case, but on the macro, you're not going to be looking at every single level, right? But especially if you're a day trader, this becomes useful, right? Because then to make the most out of your time, you want to be in the project, you want to be trading the coin that's probably going to pick up the rotation. So that's where Bitcoin pairings come into play. When Bitcoin dominance is a resistance, look at the Bitcoin pairings that look ready to go, you try and take a shot on those. That's it. Same thing with Ethereum. When there'll be a moment when Ethereum takes the lead, right? When money's going into Ethereum, when Total 2 is absolutely ripping, when Ethereum's actually ripping, right? There'll be a moment in time where Ethereum, Bitcoin takes a back seat, right? Maybe a month, maybe 2 months, maybe 3 months, who knows? But there'll be a period of time where Ethereum is in the lead, right? When that is the case, exact same thing. How do you know when you should be in ETH? How do you know whether you should be in ETH or another project? When do you know how to rotate out of ETH? When do you know when to rotate back into ETH? You use Ethereum dominance chart and ETH pairings to do that. Exactly like you with the Bitcoin pairings, right? But that's Ethereum dominance. I think this chart will come into clutch very very soon, right? Because I think Ethereum gets the rotation soon. Well, I hope so anyway. Right? I know Ethereum's been an underperformer in terms of macro gains this cycle. I saw something the other day where it was saying a gay dating app has outperformed Ethereum. I think it was Grinder. I thought it was really funny. But that doesn't mean it's going to stay like that the whole time, right? And that's one thing people seem to forget, right? Everyone's shitting on ETH. Everyone's loving Sol, and people think that's just going to stay the case until the cycle's over. Markets always work in rotations, right? Your darling of the cycle isn't always going to be the darling of the cycle. There's always going to be rotations. Eventually, the risk to reward wise, something's not going to be worth it anymore. Solana was at that stage, right? But in terms of risk to reward, Ethereum hasn't even gone and raided its previous all-time high yet, which Solana's already done, which Bitcoin's already done, right? So in terms of, yes, it's underperformed, but now in terms of room for growth, Ethereum has more. In terms of not having to put new highs in, even just to old price action, Ethereum has more than many other coins, right, that have already rated their highs. So the rotations are inevitable, right? People will see this, people pick up on it, they'll be like, okay, well, time to pump this, and then that's just what it is, right? So Ethereum dominance, do keep an eye on this chart. I think it'll be very very useful. Total 1, let's take a look. Right, let's go over here. Total 1, very simple. As long as we're above 3.01 trillion for now, right? Everything's fine. Your previous all-time high, you're above it. I'll be looking for moves back up to that D point, to that. Why is this gone? 1 second. That there. Don't know why that disappeared, but let me go ahead and do this. This is 2.0. There we go. Don't know why that deleted. But we're still in range, right? Range lows have been raided, right? Fair value gap has been filled. You're above previous all-time highs. You're above your weekly seller zone, right? That's good. You're above your monthly seller zone as well, right here, right? Which is also good. So as long as you're above these levels again, 10 days left of the monthly close, you cannot look at this monthly candle and tell me you're bearish. Okay, look at the monthly candle and try to tell me you're bearish with a straight face, because that is a breakout and that is a very successful retest of that area where you broke out from, right? So of course, up and until over the next 10 days, maybe something bad were to happen and were to bearishly engulf the entire thing, until structures ruined like that, this is a very very good monthly candle. This is simply again a retest of the zone, and the retest is successful. right? So as long as we're above this total one at the end of the day at range lows, I'd be looking for moves back up towards range highs, right? Again, what I'm looking for to actually flip the narrative is a breakdown and start turning this midline, this area, right? Start turning that into resistance, threaten to put distributive structure in, then I'll take the actual bears more seriously. But until that happens, I'm not going to take bears seriously when they're trying to preach that, markets look topped out when we're still above previous all-time highs, right? There isn't enough reason yet, just from the way I chart things and even from my own system, there's not enough reason yet to be calling tops on Total One, right? Or Bitcoin for that matter. All we have is like a rejection from pre what's the word I'm thinking of? Extended asset, I suppose, right? Yeah, pre-projected. That's the one. Pre-projected areas. We're just we rejected off there. We're holding previous all-time highs. We're in a range. We're simply ranging. We're at range lows, right? Until this is lost, there is there's no argument on the chart right now. From the way I see it, right? And of course, you can have a differing viewpoint to me. I'm not here to shit on the way you see things. I'm simply trying to explain the way I'm seeing things, right? The way I see it, the market structure is still bullish. You're making higher highs and higher lows. I don't see any bearish divergence, nothing like this, right? All you have is a like a, let's say, a sort of double top structure at the pre-projected macro ABCD and so on and so forth level. But just because you have a double top, that doesn't mean it's the market top. Right, at the end of the day, you don't have any historic price action here. You simply rejected off a pre-projected area. Where you do have historic price action here is here, right? This used to be resistance and is now support. So I'm going to give this more weight than I'm going to give this. So, in the next move up, if you go up and then you do have weekly bearish divergence, but then you SFP and do this, you start putting distributive structure in, then yes, I'd have way more of a reason to be like, okay, the markets might actually be like, starting to top high in terms of total one, take some profits, because yes, even though we're above this, we have now other reasons, other factors like buyer exhaustion in the form of weekly bearish divergence and distributive structure in the form of inverted smiley faces. You have other reasons to actually believe. But okay, even though we are above previous all-time highs, there's signs of exhaustion here. Right? We just don't have that yet, right? Which is why I don't believe the market's topped out, right? Could we chop like this some more? Yes, right? But on a macro scale for this cycle, I don't think we're topped out. I think alts still have some room to go. I think Bitcoin has some room to go. I think Total One can very easily do this and go towards these targets here, right? So we just gotta not get chopped up, like I've been saying, like at these ranges where you're literally at such key areas, and yet people are going to be like halving their ports in value, simply trying to like catch the move too early or overexpose themselves too early, right? But Total One still fine. Total Two still battling against that 3-month seller zone. So like I've been saying, I want us to be above that black line, right? Above that black line would make this chart look way nicer. But at the end of the day, you're above your again, this right here, mitigated order block. Yeah, holding that as support. As long as that happens, you can start grinding up from here, right? But in terms of this, nothing has changed from last week, right? Literally nothing. So I don't have to spend any time on this. Nothing's changed since last week. What we do have is, if you take a look, right, here's from there, we have bullish divergence currently, not confirmed yet, right? Not confirmed yet, but that is, lower lows, that is higher lows, right? So we do have weekly bullish divergence building up. So let's see how that plays out on Total 2. But that's another reason why I think, Ethereum is probably going to catch a lot of ETH bears off guard, right? Now, of course, if we can't get above this and we start, bearishly engulfing again, I would think you're probably going to go back down towards range lows before you go higher. But until that happens, I'm not going to sit there thinking this has to happen, right? We'll talk about this scenario if we actually start closing below this level again. But Total 2, nothing's changed since last week. Right, literally just sideways, low volatility, nothing's changed. Total 3, chopping in between these areas. Again, monthly for Total 3 looks fantastic. Right, why? You have your, if you go into the weekly, right, you have your weekly order block, bearish order block here, mitigated. You have your weekly supply zone, mitigated, right? All of that's been flipped to support. Your weekly fair value gap has been filled, right? And so therefore on the monthly, this entire region that is on the weekly, just liquidity pockets after liquidity pockets has been filled. You front ran your monthly. No, you haven't. I believe that's the weekly fair value gap. No, why have I done this? 1 second. On the monthly, what you also have here, right, from here, and it should be to here, is you have a monthly fair value gap, right? And if you notice, another thing you've done is you've gone and you've filled that monthly fair value gap right there. The middle of that monthly fair value gap filled, right? So you had a lot of reasons as to why this was a significant area, right? Especially this region where you literally went to on total 3, and you're holding it, right? You're holding it for now, and you're closing above everything on the monthly. Again, 10 days left. A lot can happen over the next 10 days, so we'll see if the monthly close actually ends up being this. But so far, so good, right? On the monthly, this is a breakout. That's a successful retest. If it's a successful retest, there's no reason to be looking for lower, right? Until price action, maybe let's say the monthly was to close like this, and then you were to next month was to open up, and you were to start, distributing around this area. Then you'd have a reason to be like, okay, even though we have a monthly retest, we're not getting any follow through. So then you take that a bit more seriously. But right now, you don't have any of that. Like I said, again, not enough reasons. You have a breakout, you have a successful monthly retest ongoing currently. No reason to be bearish in my opinion on total 3, right? If this was successful, what I'd expect finally, let's say we were to close like this, maybe I'll pull back to the monthly buy zone mid, right, at the most, and then I'd look for moves straight back up to the upside again, right? But again, total 3, like total 1 and total 2 also looks good, right? Just right now, low volatility, you're pinging on and off yearly levels. That's it. 2022 2024 yearly levels here. You're currently bouncing off the 2021 yearly level. Nothing to it. This is just noise, right? You're just chopping in between key areas. That's it. Probably trying to create some sort of range. Here's your range for now, right? So you wouldn't be surprised if you visited the range lows once more, but ultimately, until the range was lost and you turn into resistance, you're not looking for lower drives on this ticker, right? So that is total 3. Let's look at others. Others back as support, right? We're still a support, nothing's changed at range lows, as support. Maybe we do go down and get that 786 if we do get one more drive down. But until then, there's no reason to be bearish where we currently are, because you'd be being bearish and flipping into a bear at support. Now that's something we don't do. Once support gets turned to resistance, turn into a bear. That makes sense. When you're holding support after a move down, it doesn't then make sense to all of a sudden flip bearish once the bearish price action is concluded, right? So as long as others is holding this, you're holding support. If you then start turning this into resistance, especially the mid, you break down for example, and then you come up and you turn, especially the lower half of this zone, into resistance, then you'd be like, okay, well, I'm clearly turning what was on support into resistance. Then you'd be looking for that moves down, right? Maybe you go down to 211.49 billion. If you lose that, you wouldn't be surprised if you went down all the way towards 152 billion, right? But again, that's only going to happen if you start losing this area. If you don't lose this, you're a support right now. Ultimately, I'll be looking for moves straight back up to the upside, right? Again, nothing much has changed. Total DeFi, same thing, nothing's changed, right? You add key areas, you bounced off your trend, you bounced off your harmonic again. Could we get one more flush down? Yes, right? We could maybe go and actually hit the 886, but that's not going to differ in terms of like how the chart looks. That's going to be, it's pretty much the same as what it is now, right? You're just going to be ranging in this range if you were to get one more move down. As long as the trend holds, that's the important thing. As long as the trend holds on DeFi, total DeFi is going to be holding, and ultimately I'll look for that again, that breakout to the upside. Nothing has changed from last week. Next, others dominance. Again, as long as you're holding this, right, I think you're fine holding your alt, especially if you're actually looking at entries now. If you start turning this to resistance, you guys already know my thoughts, just get out your altcoins. Even if not fully, again, just de-risk, right? Because below this level, turning this into resistance can very easily lead you to a new range, right? And the new range for me, if you go to something like the monthly, right, it'll be much easier to see. That range is basically this, right? So if we were to do something like this and extend this to the left, there you go. You have some raids up here, which is where we're bouncing off right now. But you can see anytime you've turned this area into resistance, right, anytime you've lost the top, then it's a very likely scenario that you go towards the mid at the minimum. Right, so then you'd be looking for 6.48%, and if you lose that, anywhere from 5.30 to 4.64. So therefore, if you lose this area again and turn it to resistance, that's a very easy trigger to just get out your olds, at least lower your position size on olds and de-risk, open some hedge shorts up, right? If you don't want to fully exit your spot bags, but to actually take measured moves to protect yourself against downside, right? But as long as you're holding this, ultimately I'd be looking for moves back up to the upside. Right, so managing your old position is very simple if you look at it from that regard. As if you turn this area into resistance, de-risk on your olds, right? If you even if you let's say turn it to resistance, you go down, you rate this low, but then you come straight back up and reclaim, just get back into olds. It's not hard, right? And then you're looking for that move back up to the upside. So the hard thing here, right? It's not hard to actually wait for that to happen. The hard thing is going to be managing your emotions and actually like sticking to your rules, right? If you get below this, even if you're slightly in the red, I will just de-risk, right? Because what a tiny, tiny wound could very easily open up into an absolute gaping hole if you hold on to your olds. You decide, this could just be a fake out. Yeah, it could, but you're going to take the risk at having altcoin dominance potentially literally in half, right? If you do go that low. Of course, I'm not saying you have to go that low, but even to the mid, that's still going to be a 2% decrease overall across the market. Also going to take a serious beating if that happens. Okay, so just bear that in mind. But again, in terms of macro structure, nothing's changed since last week's session, right? We're still holding that area that we were looking at. Total 3 against Bitcoin, right? Another thing to look at. So if you look at total 3 against Bitcoin, again, nothing much has changed. We know we have a completed ABCD. We know there's a bad 2.618 and an 886 in this area, which is what you're holding. Again, as long as you're holding this, total 3 against BTC is at an area where you would then now expect outperformance, right? So again, you have resistance, resistance, support, support, resistance, 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 support, support, and then support here, right? So we had a very key area. This area is very clearly support and resistance, right? So once again, as long as this area holds a support, right, where you have the potential to put in a cumulative structure right over here, like such. So if I was to do this here, big raids, and then reconfirm this as support, you have the potential to start putting in a cumulative structure, right? And then now what you're looking at is trend shift. So if you then go and we go in the last lower high that would led to the lower low, if that was taken out and then a higher low was put in, then you've got the trend shift on the daily. Then you just be looking for follow through to the upside, right? That's it. That'd be even more signs that total 3 against Bitcoin is looking to outperform, meaning your actual cryptocurrencies in the top 100. At total 3, that's what it's showing, disregarding Bitcoin and Ethereum. Those look ready to go, right? So basically, if this were to happen, your bigger market cap altcoins are probably going to have nice rallies. AVAX is probably going to pop. Solana's probably going to pop, right? These coins, like Doge, XRP, these are going to catch some serious bids, right? And currently, again, it's areas where if you were to look at this chart in a year's time, and it were to turn out that this was the bottom, you would not be surprised at all, right? That's the point I'm trying to make. Like, this is an area where in the future, if you were to bottom here, in hindsight, quote unquote, it make perfect sense, right? So don't fade any sort of serious price action that goes on in this area. Currently, you're flipping the mid of that key support resistance that we were talking about into support, right? Again, if that happens, you could very easily just keep grinding up like this, right? The thesis goes out the window if you then turn this into resistance, right, until you reclaim that back into support. But as long as you're above this, again, total 3 against Bitcoin looks good to carry on to the upside. Right, and the reason why I think, altcoins, the altcoin bottoms for now might be a lot closer than people actually think. If you lose this thesis, then yeah, we probably free fall some more. But the levels we're holding is such serious levels that I can't see buyers just letting this go without a fight, which is why we see price dump to this area and the volatility just die out, right? Because okay, now sellers don't have enough supply to overwhelm the buyers don't have enough demand to overwhelm the sellers, but it's almost like an equilibrium, which is why we're just going sideways, because both sides of the markets know this is a key level, right? So whichever one finally shows an edge is going to dictate, okay, do alts bottom here and we catch some nice pumps to the upside, or do we have more red, more blood to give to the markets before we actually, before the blood gods are satisfied for the market, and then we can actually go back up to the upside, right? So whoever controls these sort of structures, right, whoever controls what happens in these dictates, is it the bulls or the bears? But like I said, nothing much has changed since last week. Volatility's been absolutely dead, right? It's been a scalping market recently, so nothing much has changed in the macro regard. But where we are, the actual thesis behind, okay, as long as bulls can maintain control here, the cycle's not over thesis, alts aren't going to die more thesis, right? Altcoin isn't over thesis, that's still intact, right? Until these charts begin to tell you a different story, until price action begins to tell you a different story, all of that's still intact, right? So that is, we probably went through that a bit quicker than normal, but that's because, like I said, nothing much has changed. So I'm not going to waste your guys' time by going over the same thing each week. If you weren't here in the previous streams and want to know what we talked about, just go check the last video I released out, right? That's the recording of the last stream we did here. This is just an update to that, right? Because it's important to, these are charts you should be looking at, right? And even if it's just once a week, at least it's good to look at these, which is why I go with them with you guys in case you don't look at it yourselves, just to make sure you guys have the perspective you need to have. But yeah, you can see, like, as long as buyers don't just absolutely like, let sellers just, bend them over backwards. This is the areas where, again, if in a year's time, if buyers were to defend it and we were to have insane pumps and people were to look back and try to do case studies, quote unquote, in hindsight, it would have made perfect sense why it bounced from here, right? So these are very, very key areas. Pretty much no matter what macro chart you look at, everything's a key area. So do not be fading and thinking the cycle's over or anything like this until you get the breakdowns and confirmation of the breakdowns from these key areas, right? Because if buyers successfully defend this level, again, no matter which chart you're looking at, the way up is the way is up, right? It's not down, the way is up. So let me go and check the chat real quick before I carry on. Make sure there's no questions. All right, no questions here. That's good. All right, now I'm gonna move on to Bitcoin first, and then we'll take a look at everything else. So let's take a look at Bitcoin, and again, just like the macro charts, nothing much has changed on Bitcoin. You're still ranging, right? So this is the current key inflection areas and historical price ranges. Like I said, nothing much has changed. You're in the top half of your current historical price range. You're still ranging in between the diagonals, right? You can see that you're still ranging in between the diagonals. You're currently at the golden pocket. The liquidity rate for now has turned into resistance, but as long as you're holding the golden pocket, it's fine, right? So you could have a drop down back towards 93k, but again, as long as you're holding this level, no serious damage has been done. Right? Still ranging, you're still above your 2024 12-month seller zone low. Nothing has changed on Bitcoin. There's nothing for me to say, right? Literally nothing. This is last week's candle, you can see, right? Absolute, it's a Darth Maul candle, right? Indecisive on both sides. Sellers try to take control, buyers try to take control, back down. Sellers try to take control, buyers took control and took price back up, right? So again, nothing much has happened on Bitcoin. We're still holding the areas we are. We won't be surprised if over the next few weeks we just grind it back up, basically, right? So that's all there is to say on Bitcoin. There's nothing much that has happened. Now, if you take a look at Ethereum, same thing, right? It's choppy. Nothing much has happened since last week, but you will notice, whereas Bitcoin had red weekly close, Ethereum had a green weekly close, and even though it's weak, right? Very many people just look at this as noise. At the end of the day, on a week-by-week basis for the last 2 weeks, we've been trying to grind up. And you can see from price action as well, we've been slowly trying to grind up, right? And the most important thing here now for Ethereum, the reason why I'm looking at this, on top of the reasons we just looked at, on top of the reason of key inflection area has been held, the same area that I told you guys to have some ETH back in September of 2024, right? This is your historical price range right now. As long as you're holding this, you're not worried about these lower levels, right? So only when you lose this key inflection area, you're worried about this zone, right? If you lose 2030, I'll be the first person to tell you we could go as low as 1,500s, right? I wouldn't be surprised. I'll be the first person to tell you. As long as you're holding this though, I'm not even thinking about this. Okay, as long as we're holding this, this is the range I'm concerned with. Between 2030 and 4028. Okay. Why am I looking at Ethereum? So we've looked at Ethereum dominance, right? We looked at how you don't fade Ethereum where it currently is, because Ethereum dominance is a very key support, while Ethereum isn't at lows, right? Ethereum dominance might be bottomed out, or Ethereum dominance might be very close to its low levels, but Ethereum isn't. Ethereum is at very key levels. It's not like Ethereum is all the way back at 741. Right? So now, should Ethereum dominance go up, this is the reason I'm saying you could very easily see that 5 to 6k ETH target that we have, right? So Ethereum dominance, we know why that's good. Like Total 2, we know why that's something to watch as well. Even though it's currently at resistance, if you can flip this resistance support, we're back up of a very key area, and Total 2 has legs, serious legs. On top of that, a few things to consider, right? So again, I put this in my channel, but for those of you that didn't, first and foremost, Sol against Ethereum, right? When I put this up, or when I first identified this, I put it in my own. I gave it my own. I was talking about in streams my own server first, which is basically when this happened here. And after we got that follow through is when I released it as public, like analysis as well. But what we had here, basically, right, for Sol Ethereum is we had a W shape, right? That is your bearish harmonic, macro bearish harmonic. You have your 886, your 1.618. This is a deep crab. You have a bearish harmonic structure. And on top of the fact you had bearish harmonic, what you had is inverted smiley face. You guys know why I like this. This is not distributed price action, right? So you had distributed price action going on the weekly, off the back of a bearish harmonic, right? Off the back of the bearish harmonic actually being a liquidity grab of the 2024 12-month seller zone high, an SFP. Off the back of that being weekly bearish divergence, right? That is some serious signs of weakness on Sol against ETH. Right? What does that mean? This is comparing Solana against Ethereum. This is simply trying to tell you Solana looks ready to underperform against Ethereum. And what have we had since then? We've had follow through to the downside, right? Terminal 1, so your first target has been hit. I wouldn't be surprised if we get some sort of pump back up from here. But if this pump back up gives us a type 2 return, and you, for example, go and put some sort of double top in or a lower high, then I'll be looking for the type 2, T2 zone. Right? I'll be looking for a deeper flush on this. This is the reason I said, like, you know, all we need is follow through on ETH, right? So firstly, Solana against Ethereum looks ready to die, and we're getting the first candle here, right? So we have that first move down. You will notice Solana over the last few days has been absolutely bleeding. Compare the Solana chart, right? On the weekly, on the daily. Just keep this in your mind. And now let me just switch over and just go ahead and take a look at the Ethereum chart on the daily, right? Night and day difference, right? Solana straight down, right? Down, down, down. Ethereum up and then holding, right? This is what it means to outperform, right? Solana is absolutely crashing while Ethereum is holding, right? Again, this isn't a shock because before this actual move down today happened on Sol, a few days ago, I forgot what the exact date was, but I gave the warning, right? I said, look, Solana looks ready to, like, you know, underperform against Ethereum, right? So I did move a lot of my Solana into ETH for that very reason, right? I moved some Solana into USDT, took some profits, and I also opened a hedge short on Solana. Right? I still have a very nice Solana back. Don't get me wrong, right? Still six figures big, but when you see signs like that, it doesn't make sense to then hold everything you have, right? So then, you know, you just de-risk some on the ones that look weaker, right? For spot now on Solana, what you're currently doing is you're currently losing that range low right over there. Right, that range that we had, you're losing it. It's not the end of the world. I'll explain why in a minute. It's not the end of the world, but this is also another warning I'll give you. Everyone's going to be a Solana bear now. This is not where you turn bearish, okay? Because what you're doing is you're SFPing your 2021 yearly level. If you take a look at this, right, trend line. Here's your trend line. Breakout, one retest, another retest, right? Yes, we don't have any signs of, like, you know, weekly bullish divergence or anything like this yet. But if these lows, right, if we can start, like, you know, basing out here and we can start building bullish divergence or anything like this, even on the daily, on the 4 hours, then I'll look for relief pumps back to the upside instead. And maybe to try and take a short, see what happens when you get back to range mids or something like this. But what we currently are, until you absolutely go ahead and lose this trend line, right, and you turn it to resistance, you do something like this, I would not turn bearish Solana right now, okay? I would take more of my Solana back if we go break down and we come up and we turn this into resistance here, right? If we do that, I would be taking more, like, you know, maybe like half of my Solana bag off, right? Reduce it from that 6-figure category down to, like, you know, mid 5 figs or something like this. But until that happens, like, you know, where this currently is, I'm not going to be capitulating, right? Not again, key support, right? You have your what used to be a demand zone in this area as well, right? So if we can hold this area, even though that liquidity pocket is void, you know, this is still an area where you could raid and then go back up, right? Very, very easily you could do this. So just something to consider, right? Until you get further confirmation. Now, basically, if you're not already in a Sol short, or if you're not already, you know, de-risked, again, you'd be capitulating at support if you did it, if you did so here. Okay, so just hold out, wait to see. Okay, do you get that? You know, maybe move back up and reject from the mid. Do you, even if you get the breakdown, do you then come up and put another lower high in, confirm you're back within this, right? Because people keep thinking, what if you don't? 99% of the time, you always come back to give some sort of retest, right? You want confirmation? You're back. This is back resistance. Now, to actually take any sort of negative action on Solana, because you're at support. It doesn't make sense. If you didn't take any on this way down, it doesn't make sense to do so over here, right? So that's Solana. But the thing to look at here is, like I said, Solana against ETH was looking weak, right? That warning was given. So now you're again at the first terminal. You had terminal 1, you had the 382. This is areas where you know, you wouldn't be surprised if price bounces. Right, so again, another reason to now not be, you know, fully bearish on Solana, because you could have a period again where Solana starts outperforming Ethereum, right? Just on the move back up to actually create perhaps a lower high on the Sol ETH chart, or a double top, or weekly bearish dips, whatever, right? To create more bearish structure, you could definitely bounce from here to give us a T2. If that were to happen, there'd be a period where Solana once again outperforms Ethereum, so on and so forth. Right, and again, you don't want to be short going into that scenario, right? So if you missed the like again when the warning was given here, if you didn't rotate out or de-risk, don't do so now as support, right? Is what I'm trying to say. Wait until you get further confirmation. If you go and turn T1 into resistance, that's one trigger in terms of this chart, right? Otherwise, again, you're going up to perhaps create a lower high, or you're going up to create a double top sort of around this area, right? Confirm this, maybe go up weekly bearish divs, whatever you see on the macro, right? You just wait until more bearish signs come in now to actually open up new, fresh bearish positions on Sol. Otherwise, you're doing so as support now. Another thing to look at is Ethereum against Solana. This is another perspective I gave, right? So Ethereum against Solana, again, what did you have? Massive falling wedge. You had a 382 2.618 target being hit, right? You can see very, very nice reaction off that 2.618, right? So I confirmed. And on top of that, you had, if you take a look at the 3-day, right? Lower low in price, high low in RSI, 3-day bullish divergence, 5-day lower low in price, high low in RSI, 5-day bullish divergence, weekly lower low in price, high low in RSI, weekly bullish divergence, right? You had very serious signs of strength going on in this particular area, right? So then you're just now getting follow through from that, right? So now what you're having is you look like you're attempting to have a breakout, but again, this is now resistance for Ethereum against Solana. So if you cannot get above here and you keep SFPing, you could very easily come back down again, right? So now again, which is why if you're trying to go long on Ethereum compared to Sol, you don't do so at this particular area. You wait until you get a breakout retest, anything of that sort, before you actually do that. Even though it'd be at the same area, price action wise, it'd be a night and day difference, right? You do this and this, you've confirmed you're out of this, you'd be looking for moves back up. But until that happens, I wouldn't be. This is now not a position where you decide to sell all your Solana and go into Ethereum, because now ETH against Sol is a resistance, Sol against ETH is a support, right? So now you wait for further drops in this and flip this into support if you want to do so, which is go from Sol to ETH. Otherwise, you don't do that yet. You hold off where you currently are. Okay, hopefully that makes sense. So we looked at Sol against ETH. We looked at ETH against Sol. We've looked at Ethereum dominance, right? We know ETH dominance is support, which is many reasons why I think Ethereum is sooner or later it's going to go up, right? Now I'm not going to give a timescale for that because who knows, right? Every time ETH looks ready to go, it just just underperforms again. But the longer this goes on, the more and more and more and more confluences are lining up for ETH to actually tell us that Ethereum looks, like I said, ready to start outperforming, right? And of course, the other chart for that is Ethereum against BTC. If we take a look at this, you're still holding your macro bat 886, your macro shark 886, your low to high point of control, standard low to high point of control, your high to low, standard deviation 1, value area low, right? On top of that, you've hit your deep extension 0.94 fib speed fan, right? So again, ETH against BTC is also a very, very key areas for me, right? If you were to take a risk, it was at this area, which is why again I started laddering in at ETH against BTC down at that level, right? So this was a pre-projected level. Next state of affairs, if you want to be even more bullish, one thing you have to do before, and one thing I'm not going to do, I'm not going to be fully sized up until this happens. Well, at this level here, this needs to be supported in my opinion. Why? Because again, if I was to go to 12-month buyer-seller zones and turn these on, we have the 2019 12-month macro read seller zone mid right in this area, right? And we also have the macro point of control in this area. So this zone for me is something that needs to be flipped to support. Even though there's a lot of lines up here, right? In terms of volume, this is the key level. If you're above this, ultimately looking to grind up, right? So these now are just there for me for lower time frame buyers. If you start to see bearish price action coming in here, there's a reason why it's happening, which is why I'm leaving this on, right? But if I had to have only some strict levels on, I wouldn't even care about all of these levels up here. The main levels I care about right now is this point of control and basically this zone. Right, if you can go and reclaim that into support, especially after taking out the last lower high that led to the lower low, I'd be looking for some serious moves up on ETH against BTC. So ETH against BTC is a major support. Ethereum dominance is a major support. Sol against ETH is on a macro looking topped out. Right, ETH against Sol, weekly bullish divergence, looking ready to absolutely rip, even though it's currently at local resistance. Right, which is why there's I believe these to be signs that Ethereum, sooner or later is going to take the lead from this area, right? So of course you could chop here some more. Again, you could make you could do a raid and reclaim, which could give you weekly bullish divs, right? So if you were to come down here and put a lower low in price, but then you could put a high low in RSI, you could be building weekly bullish divergence before you go up. And I hope something like that happens, because that'll give you even more reason to be bullish on ETH against BTC, right? But even if it doesn't, there's plenty of price action here that is lining up on the side of, look, ETH against BTC is at key areas. at the end of the day, right? Which is why I took a risk at this area. Would I tell you to buy ETH against BTC right now? No, right? At this particular stage, I'd wait for you to wait for this to be flipped, right? You either got in at the key level, or now you're trying to enter a bit late, in my opinion, right? Locally speaking, and if you're trying to enter right now, I wouldn't say that's advisable. I'd just say wait for this, wait for the trend shift and get in, or wait for perhaps one more flush of the lows, right? I wouldn't say get in where we currently are, just because risk management isn't optimal here, right? But on a macro scale, hopefully this is the area where ETH against BTC bottoms out, because you have a lot of arguments for why this would be a good area at this particular level, right? So let me check back to the chat. Go. Screen changed green. Is it still green? Blue? Shouldn't be, but nah. Okay. Imagine I was just talking to a green screen this entire time. Okay, right. But yeah, that's Ethereum. That's ETH against BTC, right? So like I said, many reasons why I think Ethereum's just laying the foundations for perhaps getting ready for its next leg up. We just need follow through. That's it. We need some sort of structure. We need Ethereum dominance to have that spike up to confirm the low is in trend shift. We need ETH against BTC to have that spike up, confirm a trend shift. If that happens, Ethereum's set up, right? It's holding the level it needs to hold. Or next state of affairs, flip historical price range 3 back into support, i.e. around 3030, and then next state of affairs would actually finally be go rate those highs. I don't think you'd get some sort of like triple quadruple top in this area again. If that happens, this is like that'd be damning for this chart, right? But other coins, let's to do an update on AVAX, right? I have a really nice bag of AVAX. I've already told you guys this. AVAX is one that I'm going to be getting into, and I've got into. AVAX looks fantastic in my opinion, even where we currently are, right? These are the levels that AVAX needs to hold, right? As long as AVAX is holding these levels, I don't think we go lower on AVAX. Now, if you do go lower on AVAX, then I'm only gonna talk about that if we ever go and start turning 2263 into resistance, right? If that happens, then I'll start noting that perhaps we could go lower on AVAX. But for now, there's no point thinking about it when we're at key levels like this. 12-month key levels, if you turn that on, right, where we currently are, we're holding 2023 yearly level as support. Right over here, we've hit it once already, right? Which is what this was the weekly. That wasn't the weekly. This was here. But this is the yearly level. What was one support, right? Oh, sorry, 2023 is when this came in. So after 2023 closed and onwards, we can see right from here, right? Support, reconfirmation of support. You had the smiley face at this level in September, right, of 2024, which is what we identified, and we caught this move up on AVAX. You're back at the same level again. If you lose this level, I'll be looking back towards, like I said, 1729, right? In terms of yearly levels, that's your key area there. Perhaps you go put a lower low in price, but a high low in RSI, right? Maybe something like that were to come in, weekly bullish dips were to come in, but as long as you're holding 2358 again, I don't see reasons to be looking for lower, right? Again, for now, you also have this. Hang on, let me do this and current cycle. There, right? So we have this really nice zone that I'd be eyeing between 2358 and 2304. This is the level you want holding as support, right? As long as this holds as support, you're holding this weekly buy zone as support, you're holding the yearly 2023 level as support, and I'd be looking for moves back up on AVAX. Maybe fill this weekly fair value gap or something like this before you go lower. If you are going to have one more flush down, right? But if you go and turn this area into resistance, that's where if you haven't done so, you take some off your AVAX spot bag, because you might be able to add that lower, and you also look for those scalp hedges to hedge against your immediate downside, right? Because now you're saying, okay, we could get a sharp spike down from $23 down to $17, right? That's the range you'd be working with. So then you'd hedge if you got that confirmation. But right now you don't have that confirmation of this area being resistant. So again, you don't do anything here, right? If you're going to bid, I'll do so at this particular area right over here if you get a stab into it. Otherwise, bidding spot AVAX here, very, very simple, right? Very, very simple bidding spot AVAX over here. If you wanted to keep it very, very simple, you could bid spot AVAX where we currently are, and on the daily, on the 4 hours, if you started to turn this zone we just talked about into resistance, you can literally just cut, right? that is normally what you would take like scalp leverages off of. So in terms of spot, you're risking absolutely nothing if you play it where it currently is. All you have to do is settle us up in this area, in this zone, and make sure, should you get the breakdown, right, close below on the 4 hours or something like this, and then the failed retest, even if it's on the hourly, right, that you start layering out, and you just, you do so because you realize that, okay, as long as this is resistance, there's a high chance I go to 2120 and then straight back down to 1729, right? But AVAX is a fantastic one in terms of a spot entry, but we currently are. It's so easy to manage, right? I just do so based around that zone. AVAX, right? We've got Ondo. I really hope we do get a big flush on Ondo. As much as that probably pain a lot of people, I do hope we get it. I hope we go all the way down to this zone, and some people might not like hearing that, especially if you're heavy into Ondo. I do have Ondo spot myself, but I'm not heavy into it yet, right? Not as heavy as like let's say my spot, my Ethereum or my Solana, my Bitcoin or my AVAX, anything like this. Because there's just a lot of nice wave structures down here, right? It'd be nice. That's it. From in TA perspective, it'd be nice, right? Anywhere between 73 to 80 cents, this sort of area. You have your ABCDs, you have a shark and a bat lining up. It'd be nice, right? Go rate that low. Again, if you go into that, maybe put weekly bullish divergence in, right, on a macro scale. And if we did get that, I'd enter a very heavy spot Ondo at this area. Confirmation of this area holding a supports anyway. But it's a very, very heavy spot Ondo in this area if you were to get it. If not, I'll just be looking for signs of continuation of strength in this area to slowly size up on, right? One that I do want to look at is Hype, right? Because Hype now is doing something very, very interesting, right? So what I've been saying for Hype is, as long as you're below $24.06, which is your 2024 12-month seller zone low, there's no point owning any of this, right? But if you're flipping this into support, right, then that changes things. Okay, so Hype, currently speaking, you have your breakouts on the weekly, and you have your attempted weekly retest of, again, if you go to the yearly, right, when the yearly closed, I know this isn't a year's worth of data on the candles, it's the same on the monthly as in the yearly, but on the higher time frame, basically, this is your key level, right? This isn't a proper yearly level in the sense that it doesn't have a year's worth of data by the time this yearly candle close. By the end of the day, you have 24. It's still on the 12-month, right? So I'm just going to call it a yearly level. As long as this is support, I'll be looking for moves higher. On Hype, as long as this is support, I'll be looking for moves higher. So you flushed, you're looking to get back above again, right? So on the hourly, if you were to get any sort of move up and then a pullback and then a successful retest of that, right? The retest was successful, confirmation kind of open above. You guys know what to do by now. You're looking to the left, right? I'd put my stop loss something like this, and then whether you trade based off risk to reward or you trade based off horizontals, or you trade based off diagonals, whatever it is, you then first thing I always do is look for risk to reward. I take some profits off of the risk to reward, put my stop loss to break even, and then after that I'm looking at actual targets, right? So for example, this would become a target here on Hype. Above that, $28.48 would be a target on Hype, so on and so forth, right? This trade is not right now. I'd only enter this if you get that successful flip, right? If you're an intraday trader, you're looking for anywhere from between the 1 hour to the 4 hours to size in. If you're a scalper, anywhere from the 1 minute to the 15, right? Depending on how low you want to do. But let's say if you're a scalper, it's the same thing, right? Let's say for 3 minutes you come down, you start seeing successful retest, you enter in the exact same manner. You put your stop loss exactly the same. Let's say something like this, right? If this was a retest, and then initially risk to reward wise, you take some profits, right? For me, minimum 3. And after your risk to reward is secured, the rest you're just looking, right? Especially when you're scalping, I'm looking at, okay, where are sellers coming in, right? So I try to sell into strength. When I see buyer absorption going on, I just sell, even if I've not hit a horizontal yet. But if you wanted to hit a horizontal again, you target something like this, right? Just external liquidity, all this to be stopped out perhaps, right? But all on that retest basically, right? But above this level, again, if you're trying to enter spot Hype, it's easy to manage in the sense that obviously the entry is better if you actually wait for confirmation of 24.6 being support, right? But if this does turn to be support, as long as you're above this, you can stay. As soon as you get below this, you can just cut, right? You start to see moves below 24.06, right? You can just close your spot bag, because below this level, again, you've got this trend line you can go down towards, and eventually, you have all this liquidity that hasn't been taken on Hype. If you take a look, this all liquidity that hasn't been taken, right? So you wouldn't be surprised if it did lose this level, where eventually we do go and, like, get a flush of that liquidity. We don't have to flush the entire way, but even if it's just some of it, something like this, you wouldn't be surprised, right? Because now you just have a lot of stops that's going to be somewhere down there. You can see from the wicks, right? But if this is especially if it's a successful daily close, of course you can do this, like I said, based off the 4 hours, based off the hourly. You're waiting for the successful flip in that case, right? But above 24.06, being in spot hype, right, being in a swing, makes sense in terms of risk management, right? You just do so with your stops, or your rather invalidation, below this level, and with your stops being below the previous retest wick low. That's it, right? So that's hype. So that's Hyperliquid, right? Let's take a look at Trump real quick, because this played out for us as well, right? This was the level we were looking at last stream, on Tuesday, so basically a week ago we were looking at this, and what we were saying a week ago was, look, as long as this white box is held, right, if this white box turns into resistance, like you get the breakdown and then the failure to reclaim, you go and treat this area as resistance, you start closing below the 0.5, right, the mid of this zone, then the target I'll be looking for is a 10.223, right, which is still a target. But if you were to hold this level and you were to reclaim the breakaway gap mid, right, 15.88 was the specific level, then I'll be looking for a reprice up towards 23.961 was what we were talking about last week, right? So if you see what happened on Friday, so we got the actual, we held, right, we got the 1 hour closes below. Again, I'm looking at hourly closes, right? Daily closes is where it's at if you're looking at a higher time frame. Daily closes, 4 hour closes, so on and so forth. You closed above, right? So the white box held, and then therefore after that you got to move up, and then what did you do? You got the reclaim we were talking about, right? The reclaim happened right over here. This is your key level. This for me, even though yes, this is a reclaim of the mid of this zone, this isn't a key level, right? Because all I've done with this is mark out the zone between this 0.5 and this 0.5. That's not a technical key level, right? What is a key level though is this breakaway gap mid, right? This is a very, very real level we were talking about, right? This is the same area we initially wicked to before you got that move up. So this is the same area we were talking about, right? When Trump was even breaking down from here, right? I was saying, okay, look, there's a breakaway gap mid. If you ever lose $15 is what I've been looking for. We then and breakout right here, and then you don't enter on the breakout candle ever, right? I never do. That's just the way I personally do things. Many times breakout traders get wrecked, just like this. You enter on the retest, and the retest happened right over here. And for those of you that are confused by what I was literally just before saying on hype, wait for the retest candle and then look for price action to set your stop loss. This is it, right? Here's your breakout. Here's your retest. Is the retest successful? Yes. Why? Because even though you wick below, the candle body closed above. That's telling you that, okay, this area where there was once sellers and buyers, this very key area basically that's representing the breakaway gap mid, is currently an area where buyers are showing strength. Buyers showed you an edge. Okay, cool. The breakout candle retest, right? The retest of the breakout candle is successful. So then you wait for the confirmation to open. The confirmation opened, and once the confirmation opened, did it open at resistance or below resistance? Like below your key level, basically? No, it opened above, right? That's it. That's the trigger. You enter on the confirmation, right? And you put your stop loss below your retest wick low first and foremost, right? You don't ever put your stop loss above the retest wick low. You have to be below the retest wick low for this strategy. And then, right, what you do is below the retest wick low, you take a look at the range and you look at to have a good safe stop loss. You look at the range and you ask yourself, okay, in terms of deviation, how much deviation have we had here before, right? Have we ever deviated? Well, look, if you look at this local range, you've deviated below. Yes, there's your retest wick low here, but you can see there's deviation below this, right? There's deviation below this level here. If you look to the left, there's deviation below here. So the lowest deviation you've had is actually below this wick right over here, right? So even though your retest wick is here, your deviation wick is right over there. So then you go and put your stop loss below your deviation wick, right? Because then if you get stopped out even after that, then the market really, really wanted you, right? You can't do anything about that. But the reason you don't put it directly below your retest wick low, right? You can if you want. I'm not saying you can't. Is in case you want to account for historic price action, right? Now this is you putting your stops logically in terms of, okay, we've gone this as low as this level before, so I'm going to put my stop loss somewhere below there, right? Because again, we've gone this low before, so there's no reason why we couldn't go and go this low again. Is the thesis, right? So then you take a stop loss and I'll put it below a level like that, right? Something like that. But that's the reason why this was the entry that I went with, right here. My stop loss was below there, and then the rest you just wait, right? Because the reclaim happened. As long as you're above this level now, you're saying, okay, the last lower high, that left lower low has been taken out, right? Which is right over here, there. So that's your trend shift that I always talk about as well, right? So now locally speaking, you've shifted back into an uptrend. So now you're looking for those moves up, right? So then you enter here, you just wait, and then once your target's hit, and you see sellers step in, right over here, you take your profit, you close. That's it, right? So, I'm not setting limit for this profits, because if you close above, at the end of the day, there's no reason for me to take profit, because if you close above, this level is going to be support. I could very easily go towards 28. There's no point taking profits into signs of strength, right? But you close below like this, right? Even though you're not exactly selling the top, you've got confirmation that, okay, sellers are taking control in this area, and then you close. And if you wanted to, you can hedge from this level, right? I've got a hedge from 74, which is why I didn't open a short here, but then your logical hedge would just be that, right? Sellers to control at a key area, exactly the same as this. Therefore, who's showing an edge at this area? It's the sellers, right? So then you just take a short rather than a long in this area. Right, that's it. And this is why one of the questions I get many times is, when I give plays, why don't I give this P&L cost? Because many times I give plays based on confirmations, right? Exactly like this Trump one. I'm giving you scenarios to watch for. I can't give you a logical stop loss before the scenario is played out, right? Once the scenario has played out and you get the retest and the data comes in that I'm looking for, then you can actually go and put a stop loss on, right? But many times that I'm describing these plays to you, I'm doing so before, like when I was describing this play, this hadn't even happened. The breakout hadn't even happened yet. We were still at these lows, right? So I can't give you a logical stop loss when none of this has come to play, right? Once the data comes in, that's when the stop loss comes in. So I'm showing you guys right now how I personally do it, so that in the future, if you want to actually like follow along and take these plays, you guys know how I put my stop loss, right? Is you wait for that retest, right? You wait for the confirmation to tell you, yeah, this retest is successful, then you take a bet. If you then get stopped out of the confirmation, tough luck is what it is, right? But you're not a shit trader, right? It's not the same as you then market longing, right? The difference between you entering here, right? Let's say I'd entered here, right? Let's say this entry that I did here went and got stopped out. I'm not going to beat myself up over it, right? Because I didn't do anything wrong in entering at this area. The thesis is there, the trend shift is there, the logical level is there, and the managed risk is there. If you still get stopped out after all that, it's what it is, right? You're not going to get every single play 100% of the time. What you should beat yourself up over, and which I will absolutely be relentless at you guys for, is if you all of a sudden you tell me, oh yeah, I market long Trump at $20, right, or even at $22, because yeah, look, this thing is clearly ready to go back towards $50, then it's like, yes, tough luck. That's just stupid. Why would you do that? Right, because you don't have any ounce of risk management at these areas. So then if you enter here and you go in the red, it's completely 100% your fault, right? And yes, you should beat yourself up over it, and hopefully that you learn better for next time. But you can't beat yourself up over it if you then get stopped out after you've done everything correct. And you still get stopped out. That's not because you're a shit trader. You can't put yourself down. It's just what it is, right? The market went against you at that particular moment in time, right? If at the end of the day, I'd entered here and I'd been raided, right? I'd stopped out. It wicked me deep, but then the candle that closed above, I'd just, enter at the next candle, because even though I'd stopped out the first time, the thesis is still there. So then, yeah, I got stopped out, but I'll just re-enter the same play again, right? So, it's not about how many times did you get stopped out or anything like this. Is about, okay, are you managing your risk, and are you entering at the levels that make sense to do so, right? In Trump, this was a very, very easy area to actually manage your risk, right? Described beforehand. If you don't enter here, in my opinion, then you should completely stay away from the charts areas like this until you get here, because then at least you have a chance to short. Or if you flip this, you have another key area where you can watch for similar price action to come in, and even though you're now way higher, risk to reward wise, you'll still get some trades that are worth it, right? Because again, your risk to reward is determined by how far away is your stop loss, right? Not how close are you to the bottom. You can you could have pumped all the way up to $28 if you'd closed above, right? And then you had the retest candle, and you'd had exactly this exact same setup here, you would still have had a very good trade, right? In terms of risk to reward, it would have been a trade worth taking, because again, at a key level, buys are showing strength, right? That would still have been a good trade. And if you got stopped out, it's not because you took a shit trade at the top, because you're not entering because of FOMO. You're entering because you're getting a good chance to manage your risk to do so, right? That's all anyone can ask of you for a trade, right? That's all I ever describe when I'm describing entry scenarios to you guys. Just wait for this confirmation. Once you get that confirmation, enter, right? So you had confirmation of buyers showing you an edge here, and then you had a confirmation of sellers showing an edge over here, right? So now, if you put a high low in, technically you have shifted bullish, so then you look for continuations back to the upside. So if I was to take a look at this on Trump, locally speaking, let's go with the macro first. Let's see, do we have any wave structures? One more drive down would give you an 886, right? So then if basically you come down at this area and you start bottoming out here, right, double bottom locally speaking, but also it's now the fact that you have a completed wave structure at key support. You'll be able to take plays like this again if you get the opportunity to, right? But if you now go ahead and turn this area into resistance, then on the macro, all this was deviation. This was a distribution, right? Sellers offloaded some of their positions, right? Buyers offloaded some of their positions, and I'll look for this macro 886 to get hit. Again, this is still a very key point of control. If we ever break below 14966, I'd be looking at 10.223 to be the next area. If you don't have any support come over here, might as well just nuke this all the way back down towards $1.52. Right? Below this area, I'm not interested in Trump whatsoever. Right? But now locally speaking, you do have a wave structure, right? Wait, there. So not even 886. 886 would be all the way down over here. I just realized. So you have this, right? In terms of areas where could you rebound? You have your 886 right over here, right? You have your 2.618. I believe that's hit. Yeah, your 2.618 already hit, right there. So your 2.618 of the bat's already hit. Your 886 is slightly lower for a PRZ. So if I was to mark this out, basically, let's do this first. There we go. Lock that in place. Settings, coordinates for this is $16. No, $14. Or is it 16? No, this is 16. So then I'm just going to go ahead, put it at B, go on to settings, paste that in. This is regular, so I'm going to go with white, and the line is going to be this, second thickness, and this is your BAT 2.618. And then now let's go and take this. A bit lower. We go and put this to the BAT 886. The 886 is slightly lower here. There we go. So this becomes a nice little PRZ for us, right? This is now going to be 15466. This one here. So let's just line up all the different PRZs we have, right? So there you go. So there's one PRZ already for this wave structure. Now, of course, you can do other things with this. The other thing I'm talking about, of course, is if I was to do this, create a group of drawings, you can go ahead and also do from this wave structure here, right? So from this low, that was your next wave structure, to here, to here, to here, to here, in which case your 886 is going to be slightly different. So 2.618 is going to be right over here. Now I'm gonna go on settings. This is 16.257, and then over here from B, settings, Control V. This is your BAT, internal BAT. I'm gonna call it because I took this from the internal low instead of the external low. 2.618, and again, if I lock that in place, we can go down for the 886, right? So there you go. Lock that in place. That becomes 15.619. This is your internal BAT 0.886. There we go. So what we have here then is now two different harmonics, basically a PRZ, right? So the 2.618s remain the same in both cases, because that's obviously just to do with the B2C leg, right? So what I can actually do then is lock that in place first. No, delete that. There. I can go ahead and delete this. Don't need that because we know this is the BAT 2.618, right? Slash the internal is the same, which is why we've been bouncing off this area, right? We've come down to a key area in terms of harmonics. If you go lower, we now, of course, this entire area is a PRZ, but now if you go lower, then the next key area we're watching for is this, right? This is where your two different bats are lining up, the 886 of the two different bats, back down towards this key area, right? And then if once again you go to this area and let's say you start to see something like this, you reclaim and then you reclaim this area like this, you start to bait in support, you can try and take a trump long back to the upside again, right? Maybe this time round you go up, you hit T1, maybe you hit B point before actually dying, but you'll be able to catch another trade based on the price action you get from there, right? But for now, there's no point waiting just straight for $10 because it might not come. We don't know. It might not come. This might be your one bullish back test before you absolutely just send it, right? There's always the possibility of that happening on Trump. The chances of that being the case are pretty low in my opinion right now, just with the general sentiment of how everything is looking in terms of memes and Trump being one of the reasons why the meme cycle ended and stuff, right? People pointing fingers. But in terms of TA, like if you were to go down here and you were to analyze the price action, you saw similar price action to what we described for this trade here, down in these areas. Like I'm not gonna blame you for taking a trade. In fact, if I see the same signs, I'm gonna be taking another long back to the upside on Trump. But currently you add the bat 2.618, and if you lose that, then this is your key area right over here, right? You have the 86 of the external bat, and you have the 86 of the internal bat right to this particular area on Trump. Over here, so if just there, between 15.619 and 15.466, right there, that'd be a really nice area to actually look at. So let me just delete that box for now. There. Okay, so that's Trump. Let's take a look at a few others. Doge, what are you doing? Still holding key levels, nothing much, right? Doge still chopping. But with also looking again, just be wary of being overly bearish at supports. At the end of the day, you're holding up previous week controls. You're holding if you were to go to the weekly, right? Here is your. Hang on, let me get my bearings straight. Why have I marked this? Okay, yeah, your weekly buyer seller zone right over there. You have your weekly buyer zone in the yellow. That's why this is here, right? So yeah, exactly, you're holding areas where buyers were active in this area in the past. They're being active again, right? That's it. So if you again go and turn this area to resistance, which is now 25 cents, you will be able to have a really nice risk to reward scalp short, in my opinion, at least towards 22 cents, this general area here, right? So even though it's not that big of a move in terms of percentage, right, in terms of leverage, that'll give you a nice scalp. 11% dump, right? If you do down leverage, if your risk to reward is good, they can make some nice money off that. But yeah, Doge is what it is. We looked at Trump. Let's look at PAL. This is another one of my AI plays, right? So this is I've mentioned this one before, but the structure is still intact on PAL. That's what I mean. Many alts are at areas where logically speaking, who's left to sell these? Very few. It's like people would have capitulated this by now, right? It's smart money. Any sort of selling that goes on here from people who own this is going to be capitulation, because smart money, if they do sell here, is simply to try and manipulate people to distribute their bags at lower prices so they can buy up. Because no one who actually believes in the project is going to then capitulate at the lows, right? So it's just that there's not many reasons for coins to then keep on going lower. Can it do so? Yes, but in terms of just like a balanced market, these are areas, again, like I keep saying, where these assets have a very high probability of actually bottoming out, which is why I want exposure to these, right? And if, like I said, all the other triggers we talked about at the start of this stream meet, I'll just de-risk. Otherwise, I want some of this and I have some of this, right? So many of these alts are such key areas, right? Including PAL, completed M shapes, many things I've like AVAX, like Say, like Bitcoin, all of these, right? Aptos, these have completed M shapes. Aptos, if you take a look, go to the daily, zoom in. Why do I have so many lines? It's because there's a BAT 886 in this area, right? Let me get rid of this here. So you can see what is Aptos doing, even though if you're getting red candles, yeah, great, we're getting red candles, but are you losing the key area? No. The 86 of the bat and the 86 of the shark is still holding. So again, if you wanted spot Aptos, what is stopping you from buying it here? Would you rather have some exposure? Again, remember, I say this every stream, 20-40-40, right? CMP for DCA / or when local resistance gets turned to support, and strictly for a trend shift, and you change the ratios depending on how close are you to your invalidation when you do your CMP entry, right? But would you rather have exposure to coins like Aptos at these areas, right, where you start building exposure, taking risks, where you can manage your risk really easily, right? Let's say if you decided to enter Aptos spot over here, it's very simple. If you ever go and close below, in this case I'd say 5.251, you can get rid of this. You don't need to hold this, right? You can get rid of this. Or even wanted to keep it even tighter. If you then get a breakdown and you turn this into resistance, right, the 886 of the bat and the shark, you can get rid of your spot bag. But if that doesn't happen, this is the area where even if it's your initial entry, even if it's just 25, 30%, that's going to make it a lot easier for you in the future, right? Taking that risk now and you taking time out your day, making the effort to manage your risks and, actively manage your trades at these areas now is going to give you a way better chance, right? Should you bottom out here, to even if it's just a 30% entry, like I said, to then be able to size up in the future, right? Because now, if someone trying to enter fresh here is going to have to worry about fresh stop losses, and now for them, this entire range is still a valid price range after we'll come back into. But for you, since your initial entries here, when you size up here, your average is still going to be somewhere right over here. So then, even though it's hardest for you now because people who are not interested in the market at this particular time, who fucked off, they're just relaxing, it's easy for them now because they're not stressed about this. If you're taking the time out of your day to stress, to just brainstorm ideas, to manage your risk at these levels, eventually when the market does bottom and you have your initial entry from the lows, trust me when I say it becomes so much easier to use the strategy I mentioned, which is 20-40-40, right? Then all of a sudden it's about sizing up at the right time. Your low is in. From that point on, you do not have a stop loss because any entry you do, since you already have a pack from lower, your average is always going to be in the green. So worst case scenario, you put your stop loss to break even, right? So it's give and take. Would you rather chill out now and worry about your entries later, in which case it's going to be harder to manage, right? Just in the way I was telling people to get Aptos again in September, right? Yes, you got a load of entries in the future, but now people did not take these because now you've already had this move up, right? You're getting some nasty sell-offs. So even though technically, you've completed a bullish 5-0, right? In terms of technicals, you're looking for higher, trend shifted. No one entered down over here, right? So the few people who did enter, they entered with me down in September entries, right? No one entered here, even though this was a very, very logical entry to do so. Because even though everything is lining up now, it becomes so much harder to enter when you see Aptos used to be here. Now there's all this red. What if you go lower, right? So you taking the easy bit now is going to make your life harder way later in the future, right? So it's your choice. Would you rather take it easy now and then have a harder time later, or would you rather just get that pain, get that just absolute annoyance of the market, like managing your positions and stuff, being absolutely hyper with it out of the system now, so that when the market actually goes into green mode, all you have to do is lay back and just sell when the time is right. It's up to you, right? And this is the same thing I tell people every cycle. Like, for those of you that were here, back in if you remember those September videos, I was giving this exact example with AVAX, right? I was telling people, look, I'm giving you guys an AVAX entry, and no one's gonna be entering with me at these levels. And once everything starts popping up, people are gonna be asking me, is it a good time to enter AVAX? It's the exact same thing happened, right? Hardly anyone entered AVAX, even though, I talked about this for so long. Right, September entries for AVAX were really, really good. It was for all the coins in the harmonic setup video I'd made. Right, many of them ran it was 500-600% coins like Cetus, well, right, so on and so forth. Some did 10x's even. Yet no one entered the September entries, or hardly anyone did, because I didn't see any pings in the PNL section. But there was loads of questions then asking me, okay, how would you enter AVAX at these areas, right? And it's like, yeah, you can enter. You still have scenarios. Like, for example, there's a breakout that's a successful retest, right? By all means, that is a valid entry for AVAX. But now if you look at your risk, 8% away, right? And that is 8%, 8% high risk entry, in the sense that AVAX could do this and it would still have been fine. So it's not, you wouldn't be confident in the trade. You're going to be sweating, what if I get stopped out, right? There's going to be more uncertainty in the market as you go higher. Risk to reward's not going to be as good because now you're closer and closer to your final targets, right? And so the people who decided not to enter in September and then waited until everything turned green to enter, it's like you have limited time in the market to then make the most of it. You have limited gains to secure, and you have a higher chance of actually being stopped out, right? Because even though the sentiment is shitter here, you're at such key areas that even if you get stopped out, it's going to be really easy for you to rebound and get back in, because when you know a liquidity rate when you see one. Your invalidation is obvious because at these macro levels, it's like if you lose a certain area, you're losing structure, right? At areas like this, if you were to lose the area, you're not losing structure. You could come all the way back down to a $32 AVAX at this particular point in time. Unless you entered here, you did this. Structure is not lost. Could have very easily done this and the market would have been fine. And again, anyone that entered in September, you're just chilling, right? You're chilling, while anyone that then decided, oh, it's a good time to enter here, would have been absolutely wrecked, right? It didn't happen, but the what if's always going to be in your head, right? Because it's a possibility. That's the point I'm trying to make. And I say this time and time again. It was same in 2023, right? Throughout 2023, September, October, November 2023, I gave a load of different calls, right? People entered those, right? Some people did enter those back then, but still many people didn't, right? And then I was getting a load of requests back in 2023 going into start of 2024 of like, is it a good time to enter? And it's just not once the market's already had its move made out. I can't give an entry then. I can't give you a trade I wouldn't enter myself, right? Or rather, I won't give you a trade I'll enter myself. I could give you a trade and just for the sake of it and be like, yeah, there's a trade, but that's disingenuous of me if I now give you a trade which I think, well, there's a high chance you get stopped out, but I'm not going to give you a trade just so you have a trade, right? I'll give you a trade when I think it's a good place to enter, and I think many of these you can manage your risk so well. That's the thing, right? And it just becomes harder and harder the higher you go. So AVAX, Aptos, Say is now below the key area, so I would I'm not interested in holding any Say where we currently are. Below this level, I'm just not interested in holding any Say, right? If you ever go and reclaim this, I'll add back to my Say bags. Right now, I literally only have my 20%, right? I've got 80% left to size up still. The reason I have my 20% still is because at the end of the day, again, on the macro scale, we're at the lows, right? And in terms of, is that from this low? Yeah, in terms of this, that's a lower low in price, if you take a look. But at the same time, it's high low in RSI. You could have weekly bullish divergence building, right? So 20%, and if we start to reclaim these, are slowly on the lower time frame start scaling up. But until trend shifts, there's loads of room to be adding onto this, right? If that weekly bullish divergence does confirm, then I'll size up some more as well. But yeah, there's many coins, right? Many of these coins. Injective, again, I'm not interested below this level. As long as this is resistance, I'm not interested. I'm not interested. If this is resistance, I'm not interested. Look, this is not good for Inch, right? Below this is not good. Injective was looking fantastic back in September of last year. Right? This was putting in a cumulative structure. It was holding key levels of support, right? This was looking absolutely amazing. Right now, though, nah. Where we currently are, right, in terms of key structure, until we do this, again, I'm only going to be in about 20%, right? 80%, I'm not leaving it as cash. And this is also for spot, not leverage, okay? You flip that back into support, you will have reclaimed very key levels, you can see, and the chart will look much better. I will, again, just start sizing up at that area. But below this, the reason I'm holding is because 2024 12-month buys on low at the end of the day is holding for now. But, if you get below that as well, I'm cutting the 20% back as well, right? That's what it is, and I'll just buy back in lower. But until we reclaim this as support, Injective looks extremely weak here, right? It doesn't look good. Now, of course, you have, you always make arguments of, yes, but you have multiple drives of weekly bullish divs. But, just because you have weekly bullish divs doesn't mean you need to all of a sudden be in a coin, right? Weekly bullish divs is good if that weekly bullish divs is coming in at a key area, and more importantly, you're getting follow through, right? You have, the action is now looking, price action is now looking to reclaim areas of resistance as support, so on and so forth. We don't have any of that right now with Inch, right? We just have lower lows, and it's not even proper weekly bullish div because this low here has now neglected that bullish div. So you know what, the weekly bullish div argument goes out the window. Inch right now simply just looks weak. Okay, until this gets reclaimed, I'm holding my 20% until this. If this is lost, that 20% is cut as well, right? I'll be all out of Inch until we probably go and retest some of these areas down over here, right? $8, $10, $9, some of this general area here. Then I'll be looking for fill this liquidity pocket, right? Then once those wicks start coming in, I'll just slowly start layering into spot again at those lower levels, and then aim for higher prices. But until that happens, yeah, Inch, at these areas, it's hard for me to be like, yeah, guys, you need to be all in on Inch here, right? I just can't. Not when you have these, not when these harmonic patterns look more and more likely by the day, right? Let's see, do we have anything else in terms of Injected? Do we have like buy seller zones or something like this? Not buy seller zones, sorry, like 5-0s, anything in terms of structure. A, B, C. So we have a 488. What's the point of a 488? Nope. You could say that's a 0.5 basically, right? The 488. Very close. So you're looking for a 2.0 extension, and again, there you go. Right, so that's very close to a 0.5. Therefore, I'll be looking for 2.0. Would go right with the retest of this particular area. Right, so you have wave structures that could potentially take you to the downside as well. Just not a good look for Injective, right? That could be a butterfly. Let me take a look. Is it a butterfly? 786. No, that's nearly an 886. Could be a crab. And there you go. right? So, you know, you have loads of bearish harmonics. Now, do we get $4 inch? I have no clue. I have absolutely no clue, right? But at the end of the day, if it's a harmonic, we're gonna leave it on, right? So yeah, if you know, until we reclaim that level higher, I have no interest in injective where we currently are, right? And again, this is what it means when I say don't marry your bags, right? It's like, yeah, injective looked great here, we took some profits up here, and then, you know, whatever was remaining, as you got hit a break even, I entered 20% when we got that liquidity rate, and there just hasn't been any signs for me to add anymore, so I'm not going to. And if we ever lose my initial reason for entering the new 20% again, I'm going to be all out until deeper levels get hit. Right, I'm not injective maxi, I'm not ETH maxi, anything like this. Okay, you just marry your bags. If you're going to be maxi of anything, be a Bitcoin maxi. But apart from that, yeah, injective looks absolutely horrendous. Let's take a look. Anything else? Let me look at chat real quick. Chart Nia. Yeah, let's take a look at Nia for you, Mad Villain. Is that a D-God? Oh, I don't know if that was a D-God or not. Looking at your PFP. Nia USDT. Nia's at key inflection areas. Very, very nice. Let me go ahead and turn these two off once. So, key inflection area, basically very, very important level in history, very reactive zone. As long as this is holding on near, I won't be looking for lower prices. You've raided the lows. You have no hope of a weekly bullish divergence yet. But as long as this level holds, you're fine. Like this right here. Unlock that. Right, again, this is a key inflection area right over here on near. If you wanted to enter near, right, as long as you're holding this level, you're fine to do so, right? So for example, you could do 20-30% CMP entry, have an allocation for should you go towards 2.886, basically towards the bottom half of this zone, and then have an allocation for, again, when trend shifts, right? So my 20-40-40 rule. And if you enter near here, on a macro scale, your stop loss is going to be something like, if you wanted to take a wide risk, 30%, a bit too wide. Okay, if you're going to go with this stop loss I'm going to give first, okay, this one, then you definitely DCA, and my DCA would be at the lower half of the zone somewhere, right, below 2.886 basically, right, 2.886 or lower, let's say, right, in which case, yes, it would be kind of worth it, especially if you consider that you have now these highs to take out. So I'd take it towards $10. That'd be a trade worth taking, right? But if you do, again, if you go with this stop, understand you are 23% away from stop loss, so manage your DCAs accordingly. Another thing you can do is, if you go with the same DCA method, your average would be somewhere around here, right? Let's say something like this. You can go with a tighter stop loss, which is just this wick here. 13% risk, but now the chances of you getting stopped out are slightly higher in case you do get a liquidity raid. Right, so like I said, I like to account for what kind of deviation have we had around this area before, and we can see at a minimum, you know, deviation like this is something, in my opinion, it's going to be helpful if you account for it, right? So then I'm just going to go and put my stop loss, something like this. Risk to reward wise, risk to reward of 10 to the final target, for me that'd be a spot trade worth taking. But again, don't go all in at this particular area. Right, 20-40-40. If you're unsure of what this is, just check one of my other YouTube videos, because I've gone over this basically every stream. Definitely not all in. You need to have certain triggers in terms of price action in which you're actually going to enter, right? So again, 20-40-40 is your best friend for that. But it's the areas where, again, like, look, as long as you hold this level, you're not going to go lower, right? It's very reactive. You can see support, resistance, back to support, back to support. As long as you hold this, you're looking for higher targets on near. If you don't hold this, however, like, if you turn this to resistance, right? Another thing that could happen that I'd consider what you watch out for is if you get the breakdown and then you start turning the 2.886 into resistance, that's your early sign to start layering out of spot, right? Because if you turn the mid of this into resistance, there's a high chance you actually get that flush, right? So that's your early sign. If you actually start turning 2.886 into resistance, to either fully close your spot bag or at least start layering out, right, and just cancel your DCAs for now. Because if this turns to resistance, there's a high chance you might get a deeper flush before you go higher. And you'd have to manage your position more if you decide to do this. But that's on you, right? Are you an active trader who likes to micromanage their port? Because I am. right? Or are you someone that just sets it and forgets it, right? I know some people prefer that. So I'd go with this method I just described, which is just, enter DCA somewhere down in this zone, put your stop loss below, like, deviation wick close. If you want to just set it and forget it, that's what I'd go with, right? Deviation wick close are there. But if you want to actively manage, then you enter here. If you get below 2.86 and turn into resistance, then I'll just close there early, and I'd wait for the 2.86 at the minimum to get reclaimed to re-enter. Otherwise, I just wouldn't touch it, right? Until you either hit the lower prices or, like I said, 2.86 gets reclaimed. Now, if we take a look at NIA in terms of wave structure, because this had wave structures before, like I just turned off. You had a near enough 886 before you actually went on this run. That is no longer valid, so we can delete that. You had a near enough 786. In fact, you have still a 786, which you've hit. Oh, that is beautiful. Okay, NIA now has, I've been waiting for this for a long time. NIA now actually has a completed harmonic as well, right? So your argument for actually being long at this area just increases. What you have here on NIA is a pattern that we call the Gartley, right? This is a 618 basically, 886, right? 786, 1.3. This is a bullish Gartley, right? So NIA has a completed harmonic pattern. In fact, let me add this to my Focus V2 chart. This was in harmonics on completed for this very reason, right? I was waiting for that Gartley to complete. This is now no longer harmonics on completed. I'll leave it here for now. I've got it in my news, but the harmonic now has completed. Okay, you have a completed wave structure on NIA, which is very, very good to know. And if this does again happen to be the low for NIA, then you have another reason to, right? The wave structure completed at key areas. So again, if you do go in at this area, I do so again still with a DCA mindset, right? I wouldn't go all in here unless you're doing the lower time frame. But you have another reason as to why NIA actually has a reason. You have another completed confluence as to why NIA has a reason to then start basing at this level and then go back up to take targets out, right? This time around, I'll just be looking for $10 probably on NIA, something like that, because you have all these highs here, right? The second high made a lower high, or literally the wicks, you can see nothing has been stopped out, right? So if I was to zoom in here and you take a look, wick number 1, wick number 2, wick number 3 is right over here, wick number 4 is right over here, and now you have wick number 5. That is all just liquidity waiting to be taken, right? So I think you base here, NIA takes all of that out. I'd probably just target around $10.166, right? Don't get too greedy at these areas. You pretty much have had a 5x if I'm not mistaken, or like a 3 point something at least. I was thinking, oh, it's not exactly $2. That's why, right? Yeah. But yeah, 263%, near enough a 3x, right, in price. And if you take this as a swing long, even 2-3x, that's some serious gains, right? So you can do spot, you can do low leverage, swing for this. If you decide to go high leverage, just manage your position size. Of course, we know leverage doesn't matter. What matters is your position size. We don't have any weekly bullish divergence, but yeah, you have a completed harmonic. You have a Gartley here on NIA. So that's an area where it makes very, very nice. It's an area where it makes sense to manage your risk and to actually take a shot at NIA, just like that. You have a completed harmonic. Didn't realize. Should have set some alerts up, but it's what it is. The harmonic has completed. If I'd been this, I would have entered a position here on the liquidation wick, but I didn't have alerts up, so it's what it is. I missed the initial move, but it's not much, right? It's like, it's not had like a seriously big move or anything, so it's fine. But that's NIA. NIA back since TG, that's amazing, bro. yeah, that's amazing. Did you have you been bag holding that like even through $20, or did you like take profits and stuff up there? I don't know if NIA would ever go back to 20. Right? I'm not trying to sound like a dick for your bags, but I think many of these olds don't go back to their old highs. So if you do get these moves back here and you haven't secured any profits on your TGE yet, then I'd recommend, like, whatever you're happy with. You don't have to go all out if you're not comfortable with it, but whatever you're happy taking, take some, because I don't know if NIA goes back to all time. I don't think many olds do, right? I don't think many olds go. We're just too diluted this cycle. But hopefully, for your sake, that'd be amazing if you did get back to all-time highs, and maybe even put new highs in. But okay, I can't tell you what to do, but just a advice, let's say, or rather, just what I'd personally do is, if I was still back holding if I was back holding from here and I haven't taken any profits and I see structure like this, once I'd get that move back up, we've liquidated all these people. I'd definitely take some off. Like I said, if you're not comfortable, I wouldn't take everything off, but enough to where, okay, whatever's remaining, if it now went all the way back down again, I'm not going to be stressed about it, right? Because I'm aware that, from last cycle having around 18,000 cryptos, we've got like 3 or 5 million or something crazy like that, if I'm not mistaken, off the top of my head this cycle, which means there's less liquidity in the market and way more areas where that liquidity can go to, so it's way more diluted, right? So just for that reason, mathematically speaking, it's just impossible for many of these alts to go back to their old highs again. So just keeping that in mind, I'd definitely de-risk some. I can't talk about what the macro, thesis are going to be like 10 years, 20 years down the line, brother. Maybe near it, or, since we're talking about near, maybe they release a product or they do some partnership that absolutely takes the world by storm, right? But that's something we can't predict. And until something like that happens, just in perspective of TA, there is no reason for this to absolutely pump to $20 again. And there isn't. It doesn't need to do that, right? Because many people who had the TG definitely would have taken profits if, especially if this got to $20, that would have been a 100x, right? So of course the back holders are out. So now it's just the people who are trading this, right? So unless Near has a product that I'm not aware of, right, where they can, compete and sustain their market cap at all-time highs, there's a reason why people should flock to their product. Well, the question you could ask yourself is there a justifiable reason in terms of market cap why Near should be back at $20, right? If there is, then, you're okay holding as long as you can justify it and you believe in it. If there isn't, just in terms of TA, like, just in terms of TA, technically external target is, $8, right? And for me, $10 is a liquidity grab because, that's key support. If you still see sellers, being active there, in my opinion, that's it. You look for lower again because you've had a 200% pump in price, right? And then, you look to accumulate should any higher lows come in or anything like this, but otherwise, ultimately, I don't see why, $20 again. I don't. It might happen in the future, there might be news, but that's something we don't know, we can't account for, right? But even from here to here, that's going to be a really good trade. So, but yeah, in terms of where we currently are, it makes sense to have exposure to the Near. But if you've got 27 cent TTG back, bro, you're chilling, honestly. Let's look at ENA because I see that's for ENA. Let's take a look. I sent you a DM, by the way, brother. Let's see. Following our call in AR. Let's take a look at ENA. ENA USD. Why do I have two charts? Okay. Let's look at the Binance chart first, and then let's look at the Bybit chart second. Which one has? Okay, we're going with the Bybit chart. ENA. Here we go. If you take the volume profile for your impulse low to your impulse high, what you have is you've turned your value area high to resistance. You can see that, right? The value area high is now resistance. So you're below your monthly fair value gap low, right? Not good. Therefore, I'd be looking down towards the point of control, basically. The point of control is your next area. If you can maintain this point of control, then I'll be looking for the bounce back up, right? But if you can't hold the point of control, then value area low is your next area in terms of this. Now, of course, you have your 2024 key levels, but in terms of yearly, that's what you have, right? So then you have to look at lower time frame levels. In terms of lower time frame levels, what else do we have? You have the fact that you did have an 886 complete here on Near, right? If you take that X, A, B, C, D, you had an 886 complete there. You have a 86 down over here as well. So let me just zoom in and put it in right over here, 0.886. There you go. Yep, there. Right, so you have this zone basically between your impulse point of control and your macro backed 886, right? This is the area, in my opinion, which ENA absolutely needs to hold. If it goes below there and it turns this to resistance, look to the left, you don't have anything, right? You have some support here, but ultimately this area between the value area low and this wick is what I look for next. But this is your now high confluence area, right? That's where I look for. What about, so this is, we've done from here to here. What about the high to the low? One sec. So you're at your macro value area low as we speak right now, right? So if you take a look on Bybit, your macro value area low is where we currently are. So there's a reason why we're bouncing where we currently are, but if we lose this again, your net high confidence area is lower, and honestly, I'd want us to go to this area now, right? Give us that 786. If you go back to the Binance chart once, since actually, no, this is fine. Since this is more data, there's your macro, and one last thing I'd want to do is, if I get rid of that, what about if I do this, if I go from high to low, and yeah, that's unticked. There's another reason. You've turned your high to low standard deviation 1 value area high into resistance. The point of control for this one is exactly over here. So you have this very, very confluential zone, straight up just zone, right? From here down to here basically, that I'm going to mark out for ENA. In case you raid, in case you wick below that 886, right? You have a reason why you'd wick. So let me just do this and plop this over here to the right. Here you go, right? This big red zone, not red, sorry, but this, this big box on ENA, that's what you don't want to lose. If you lose it, wraps. You go all the way back down towards 19 cents to 13 cents for ENA. But if you don't and you put it here, then this is a very, very nice area for you to put a macro higher low in. Talking a macro high low, very, very nice area for you to do so. Do we have any ABCDs that we can look for? Here to here. Hang on. 477. See, I hate it when we don't have a 0.5. If we did this, that's a 464, 477, 499. What about if we did this on the hourly? Let's take a look. Perfect. Okay, if you do this on the hourly, I'm going to take it from this wick top over here, right? So on the hourly, that is definitely a peak. You can see that. If we do that, then we have basically a 0.5 right over here. So you're looking for a 2.0, right? If you're looking at a 0.5, which actually already has hit, which is again another reason why you're bouncing off where we are. So the macro value area low. One second, let me get that 2.0 here. There we go. Settings, coordinates, we're looking at 44 cents. I'm gonna get this and I'm just gonna put it at the B point. I'm gonna turn it yellow and settings, Control V. AB equals CD, this is your 2.0. Okay, lock it in place. We're losing the ABCD 2.0, which is again the reason why you got those kind of body closes here and all that support. You're losing that level, right? So again, another reason why, you have your monthly fair value gap low over here. If you go to the monthly, there was your fair value gap right there from that wick to that wick there, right? The monthly fair value gap low plus your ABCD 2.0 are both being lost. So again, below this level, your next key area, in my opinion, is down at this level here. So I'd wait for that to get hit on ENA, or considering that you're currently at macro fixed range volume profile now, right? If you turn the macro fixed range volume profile on, and let me just change the color for this so it doesn't get confusing, right? I'm just gonna make it something that stands out. So let's do color I don't normally use. Perhaps let's do black is used a lot, white is used a lot. Some like no. Orange. No, let's do blue. Okay. No, not blue. Sorry. Yeah, let's do green. There you go. Green, green. Point of control. Green. There. There's your high. There's your low. There's your point of control for the macro. The only reason you're holding here is because the value area, the macro, the macro standard deviation 1 value area low is in this area, right? So again, if this holds, I wouldn't enter here. I'd look for that flip, reclaim this level. That's where I'd actually enter on ENA. I wouldn't enter based solely off that. If this doesn't hold, then you guys know now where we're gonna go. Right down to this target is what I look for. Um, yeah, I mean that's it. There's nothing more to add to this, right? That's it for ENA. Either reclaim this zone between the weekly fair value gap and the ABCD 2.0 into support to add. If you don't get that, just wait until this price action tells you you bottomed out somewhere around this area. Where you currently are, there's no point adding, because even though yes you're at support, you're also at resistance above you. Might as well get above those resistances first before you add on ENA.
Would you look to short here or?
No, I wouldn't short here either. This would be a no trade zone for me, simply because the macro point of control, the macro value area low, sorry, is still being held. So if you went below that and then flipped to resistance, you could be able to scalp short this. But risk to reward wise, it wouldn't be worth it here to try and short this. You're holding a key level for still at the
Yeah,
end of the day.
yeah, I agree. Like I'll send if you could put your ENA chat in the chat so I could take a look, that would be great.
Yeah, sure, bro. One second, let me do this, and then
Because it is at support, so risk to reward, as you said, is shit here for shorts.
yeah, there we go.
Yeah, so you're looking at like 0.33.
Yeah, bro. Basically, if I click on that big rectangle, anywhere between 0.35 to 0.29, so base around
Makes
there
sense.
somewhere, yeah, bottom around there somewhere.
Yeah.
Maintain macro structure and then go higher. Either
I
that
wonder
or
how
just
else you're gonna
reclaim
look at
this.
Bitcoin lose 92.5.
Oh, it's gonna be nasty. Everything, bro. The entire
Yeah,
alt market's gonna get clotheslined. It's gonna be absolutely horrid.
clothesline, absolutely. I mean, I look at total free, right, and it's like, um, could you pull up your total free chart? I know you went over it at the
Yeah, sure,
start.
bro. Hang on, I got you. Let's go in it here.
So you're really looking at that D point
Yeah,
or C point for that because it's an inverse harmonic.
yeah. So if we did get any more pullbacks on this, the one that would make the most sense is get that zero point 0.5. Basically, I'll look for a really deep one, down towards the level of
Yeah,
125 billion. Yeah, since we've already got this, just rate that low.
yeah, makes sense.
But yeah, I think total three on the monthly looks great, but let's see if we can follow through there. We've got 10 days left. Who knows what's going to happen over the next 10 days?
Yeah,
Uh, um,
February's been so cooked. I can't lie.
yeah,
Like,
yeah.
the trading has been so fucked. Like
Just
I've
sitting
just been scalp
sideways.
trading. I've had a few swings, but nothing major.
Yeah, yeah, same, bro. Scalping's it's just been a scalper's market. You think
Yeah,
you're gonna get the move up, and you just get smacked straight back down again, and then go back up, back down, just chop about.
yeah. I put a post up. I don't know when it. I think it was on the 7th, so a week into February, and I put shorts over longs.
Hmm.
And then I took a short that following Monday, but the Monday range hadn't formed yet, so I lost that short. I got stop loss got hunted, and
Yeah,
then Tuesday was really the day for shorting. I'm talking about like last Tuesday.
last Tuesday, yeah, yeah, bro.
Yeah,
Um, but yeah, man, let's see what happens here. Who knows?
I missed a long on Bitcoin today at 95.2. That would have been nice. We just tapped that liquidity pocket, but it was like 8 a.m. I was dead asleep then. I can't lie.
Oh, time for. Oh yeah, we're pretty green to be honest. Nice little
Yeah,
rebound up. Yeah,
that's what I've just been focusing on, just scalp trading Bitcoin between like 95.2 to the 98K, 96K level, 97K.
yeah.
Just booking like 1 hours, 2 hours, whatever you can.
Fair value gap, 4 hours. Yeah, but it's the lowest. The volatility is so dead.
So
It's got to
dead,
be building
bro.
up for something explosive. But I don't know if it's going to be down or up. Who knows? It's a coin flip. Structure wise, I'd think is to the upside because there's nothing like overly bearish. But then they might just extend this down to 83 before sending it back up. So we'll have to see.
Yeah, agreed.
Then that's my two targets. If you get a move down, I'd want to see somewhere here being filled. And if we get a move up, then 100 and towards 115, 120s, I think where you probably go. But yeah, let's see. Let's see. Let me check back to the chat. How bad is Sol looking? I mean Sol. I wouldn't say it's looking. Let's take a look where we are.
I took partial profits on my short at 167.
Yeah, yeah, same, bro. As long as this trend line's been respected, decent 31. You have support, right? So this isn't where you capitulate until you get confirmation now that yes, you're now below this range as well. If you lose the trend line and the 2021 yearly level, then you can build onto your shorts. You can add shorts. If you're not shorted, you can open a fresh one based on the rejections you get around this area. You put your stop loss above those, and then enter on the red confirmations. But where we currently are, the thing I said earlier was where we currently are. If Solana holds here, we could very easily get another move up to create a macro level high if we are truly bearish before we go down, right? So just flush out all the late shorters. At the end of the day, the lows have been swept. Um, and if you look at Sol against ETH as well, you've hit your terminal one, right? 382, that's been hit. So again, this is typically areas where if buy step in, you tend to get that type to return in terms of harmonics, and that would just once again signify that Sol's going to start outperforming ETH. Perhaps you get that money rotation in, perhaps Sol goes green again. Whatever reason, this isn't where you now open up fresh shorts, right? So if you're already in one, like I said, you take some profits until you get confirmation of ETH against Sol topping out here, of Sol against ETH, locally bottoming out over here, and of Solana actually losing this level. Then you have a reason to look for that, back test that tells you yes, sellers are active. You have a reason to then short. Then you could be like, yes, Solana's looking bad. Yes, this move down is bad, but now you're at an area where instead of thinking Solana looks bad, you got to be thinking like, okay, I've got a potential opportunity to perhaps catch along here, right? Because again, in terms of the range, lows have been raided, and you've just retested this key area again, right? That's what's happened on Solana. So just keep an eye on this. If this is a successful, especially 5 days left of the weekly, but even like 3 days, the daily, 2 days, anything like this, if you end up closing above your 2021 level and your trend line, then I think you could actually have a move back up on Solana, right, towards 188, somewhere around there minimum, in my opinion. Maybe get that back test to confirm whether you've lost your 2024 yearly level. If you reclaim that, then this is your entire new range, and that this could very well just be deviation again. Right, so just don't completely write it out yet, depending on where we are. Because if you miss that move from the top, you just got to understand you're now at support, right? So until the support is now against resistance, you don't open up fresh shorts here, bro. Big spot bag holder. Um, no
Big
problem, man.
spot. Who said that?
Decent 31.
Oh,
What was
Sol.
your what was your entry? Depends on that. If your entry is
Yeah.
like literally around 270, then that's a bit cooked, bro. I can't lie. But especially if your entry has been, since start of 2024 even, then you should be fine.
Arsh is tweeting Sol to zero.
Probably around $200 average. Okay. So did you go like top heavy basically? Um, like your biggest additions were up here. Okay, yeah. Well, I mean, I hope you do get one more move up, bro. Before, if we are to die, I hope you do get one more move up before we do die. You should be able to sell in green if that happens. At the end of the day, what I look for is, if I do this right over here, right, I'd look for a move back up towards this area, distribute around here, and then that'd be a really nice thesis to target, in my opinion, like the low 100s again, minimum for Sol. But if you don't get this, and you get this breakdown, and then you start failing, like you see buys on the lower time frame attempting to surface for air, they're struggling, they're gasping for breath, but they just can't keep their head over the water above 169.94. Like I can't tell you what to do, but I'd be cutting losses, right? Because yeah,
I
you're in the
think
red, but you could be way more in the red.
I think also Solana's volume and attention has kind of been dependent on Pump Fund, to be honest, and like how well meme coins are doing at least.
Yeah,
So when meme coins have been doing badly, sentiment is negative. You've seen Solana downtrend, right? We peaked at 290, breaking previous all-time highs. I mean, even when we tapped previous all-time highs for the first time, I'm talking about 2021 highs like 260s. We
Yeah,
had a nasty rejection from
yeah,
260 down to like
massive
180s.
SFP. Yeah,
And then we had the S&R flip, and then yeah, it ran up to almost $300. And then since then, market structure flipped bearish. So yeah, until we kind of bottom out and market structure starts to accumulate an uptrend, then I wouldn't really be looking for longs on Sol. It's the time to wait, in my opinion. There's no point forcing trades until like your confidence is, others' dominance, Bitcoin's dominance, cash, DXY, total Bitcoin starts to play in your favor.
exactly. Yeah, you're 100%, bro. My thoughts exactly. And on the weekly as well, which is nasty. We hadn't had this yet, but we do have it now on the weekly. Before it was just like hourly 4 hours, right, for Solana, so it wasn't really that serious. But now, if you notice, the last higher low that led to a higher high has been taken out as well, right? So this is now a market structure shift ongoing. What you say from this is, okay, you're just now looking for a lower high to be created to confirm you're actually in a downtrend for Solana. So you're really praying this is just deviation right now. If I really hope, that this would just be deviation, especially if anyone's heavy into Sol. Hey, hopefully you get a chance to offload. Um, but yeah, the last high low that led to the high high has also been taken out, right? So now, what you'd be doing is looking for that lower high to come to then be like, okay, we've gone from the right side of the market where you're on the buy side putting higher highs and higher lows in to the sell side of the market, right? The where you're putting lower highs and lower lows in, you're on the sell side, you're in the downtrend of the market. So on the macro, on the weekly, I do think you probably get some green candle at some point. And the question is, does that green candle actually give you that lower high, or does it confirm you to have deviation over here? And if you don't think Solana's topped out yet, then you're hoping that this move down here is deviation. But if you have the belief you think Solana has already topped out, then you'd be looking for that lower high. Okay, and this here is a logical area for that lower high right there. In my opinion, somewhere
What do
around
you what do you
215, 226.
what do you think, bro? Do you think Sol's topped?
I don't think it's topped yet, but I also can't ignore the fact that if we do break this level, then I'm going to be way more likely to say we have. Because in my opinion, the way I see it, this is like your final key area before you actually seriously lose structure and go back into an old range, right? The weekly bearish divergence has played out, and also the reason I don't want to say Solana's topped out yet is simply because of ETH against Sol. This isn't going to be indicative of just Solana itself, of course, but if ETH against Sol can hold here, then we might be seeing that one final rotation back into Solana again that can send Solana's market cap against Ethereum higher, which is just going to be
Mm,
correlative of Ethereum still either going down or going sideways, while Solana is going to be gaining in value. So where we
right.
currently are, I don't want to say Solana's topped out yet, but if we do go and we turn this into resistance now, I would be very inclined to say, yeah, I think Sol has topped out.
Okay.
Yeah,
So
because
you're
then I'd
saying
be
a
looking for
break
that deep.
a break below like 160, 150 is below that trend line, daily closes.
Yeah, yeah,
Makes sense. Yeah, no, that's a good trend line. I didn't even look at that yet on the weekly. But to be honest, I don't know. Like I think crypto's like a lot. It's got a lot longer lifespan than what we're considering. Like we're traders, right? So we
yeah,
trade
exactly.
4 hours and stuff. But if you think like 10 years down the line, okay, maybe Solana dies down, people move on to a new chain. But for meme coins and stuff, Solana's really where it's at, right?
Yeah,
Like Solana and ETH.
yeah. Plus, it's if you look at the higher time frame structure, it's like the lower time frame might seem very bearish, but for all we know, this could be like nearly the extent of the move done, right? If you look at the monthly, if you look at the 2 months, structure hasn't really changed. You've got massive SFPs. You can't
Yeah.
ignore these candles are absolutely ugly, but if this can then correlate, we can follow through with okay deviation and start reclaiming levels, then there's nothing stopping Solana from just
Hmm.
actually going to fill those once again. Um,
I'm surprised we haven't had a more of an influx on USDT and USDC dominance. I mean, when you look at the tariff wipeout and everything, like I'm
yeah,
surprised that hasn't increased massively. It's like, well, I guess everyone's just rotated into Bitcoin
yeah, I'm
because
guessing that's
Bitcoin
it.
dominance is so high. Like,
Yeah, Bitcoin dominance is absolutely ripping. You'd think, yeah, like you said, you'd think it'd be USDT dominance or USDT plus USDC,
yeah,
but people aren't going into USDC. People aren't going into USDT. Bitcoin is the one that makes sense. Bitcoin dominance is the one that's just so volatile.
yeah.
Um,
But even that is like, okay, 60% is a lot, but we're not pushing like 65 yet, 70s region, which is,
yeah,
is weird.
It feels like you're like sort of. It feels like we're coiling up. It's like you're trying to compress a spring really hard before it just absolutely explodes.
Yeah, yeah, that's
Yeah.
true.
Let's see what March brings. I do hope for a relief. I think right now I'm leaning towards we go back up to the upside.
It must be, bro. Like, there must be relief because we've, come down so much. We've had such a big pullback. I think it's time smart money will start buying, and then retail will follow and FOMO in.
Yeah, yeah. Plus, it's like where these charts are. It's
I think Sui looks good here, like 3.09 to anywhere around this region looks good on Sui.
yeah, bro. Yeah, holding very key level here.
Mm.
Weekly, right there. Yeah, your liquidation area where buys to control. You're still above that, so it's good.
I th-
Um, but let me go to focus V2. Anything else that I need to Tara chain? This one I had a this thing pumped, which I'm very surprised about. Like I had a very small bag of this, simply based off structure. Um, if I do this, I've not gone over this in stream simply because I deem this way too risky to just call on like YouTube and stuff. But what we had was a like completed wave structure on Tara, right? So this was in my previous in September, the harmonics setup video I released. This was in this one, but we had a type 2 basically in February, start of February. So I got a little bag there and it's pumped up. But I don't know what to think of this one. I've seen a lot of like KOLs just shilling the hell out of this coin recently. Um, but the way I see it, this is just a trade for me right now. But ignore this one. The one I want to go over properly are some of these other ones, right? So Maker, this is why you be patient for these key areas. Absolutely ripping today. Right, so the same area we were looking at, you have your BAT, you have your BAT 886, you have a BAT 2.618, and you have your monthly fair value gap, right? The full thing filled. You had a 1.13 extension, you hit a 2.0 extension, you're now just getting a nice little move off it. If MKR can come up here and especially flip this, right? 2023 12 month key level into support, what you will be building here now is a cumulative structure on MKR off the back of a completed harmonic, right? That took nearly 2 years to complete, right? It took 2 years to complete from June basically to February. That's basically 2 years of 2025. Basically, took 2 years to complete. You have a weekly bullish divergence, right? And this for me is a chart. Like this is the whole reason I said MKR is a bid here for me, right? So which is why I'm an MKR long, swing long. Um, I either get stopped out break even, right, or this goes much higher. I didn't enter this as a scalp. I'm okay with getting stopped out. I'm okay taking multiple stabs at it, right? It's risk free. But I'm looking for like minimum go towards the B at least, right? Like reject off the B to completely invalidate this harmonic. But if you don't on a macro, like 886 to 1.13 of this shark, what I'm going to be aiming for, take this back to the upside basically for MKR. Right, so MKR getting a nice move up for if anyone else entered based on like the last 2-3 weeks we've looked at this. That area that PRZ has just been holding so strong on MKR, right? But apart from that, there's a few other coins. We know Fartcoin absolutely died, right? Absolutely terrible. I got stopped out this one. There was two successful
Oh
scalps
my
on this,
gosh.
and then yeah, the third one just got stopped out. We turned this into resistance right here, the trend line. So now you just have this old range. Let's just see what happens at the mid of the range. That's it. There's nothing else to go off, right? Otherwise, if you don't hold the mid of the range, then pretty much what you're going to be doing is going all the way back down towards these lows again.
Yeah, I wish I took a jab from Wednesday onwards. Like Monday and Tuesday, I shorted Fartcoin.
Yeah,
First short got stopped at stop loss. Second short got stopped at break even, and then yeah, I should have jumped back in because that's after it kind of topped out and then started bottoming.
yeah, bro. This absolutely nasty wick down here, and I didn't have alert set
Ah,
up, so I missed the like breakdown retest. Otherwise, I could have exited my trade a bit earlier. But then I got stopped out below this after the actual move down happened. So I was like,
yeah.
oh shit.
I put my chart in the VC.
Uh huh.
Techie liquidity grab at 70 cents, and then yeah, we broke below resistance, came
Yeah.
up, tested 60 cents, broke down.
Weekly low. Yeah, bro. Let's see. At this particular, do we have any at all? 1 second. Nope. Not on the weekly. Not on the daily. What about this? take the low to the high to, I mean, it's not a, it's too deep. It's 1.618 to 2.618 typically. If I go to the hourly, 1 second. Right, that's one way to put it. The other way to put it would be to do this. What would that give us? 318. No, that's not good. 394. Straight up to, but then I have a feeling that's going to be, yeah, it's even deeper. So the best course of action is this. There. Deep extension. So we're having a, basically a, oh wait, no, that does make sense. 1 sec, I'm stupid there. A, B, 382. Right, let's do this. Although I will be taking a stab at this level. I don't think it's over quite yet with the confluence we're going to be having down here. Right, so that's a 382 rejection, which means we're looking at a 3.618 at this stage. You've gone too deep. 3.618. Come on, man. There we go. So we have a really nice area coming up, which I'm going to be looking to get into, in the sense that we have a 3.618 of a wave structure plus the 886 right over here. Actually, the 886 is hit now as we speak. There, so that's the 886. So we have a nice PRZ. So if I lock that in place, settings, coordinates, there's number 1. There, so this is your macro bat 0.886. So that becomes your first target, and your second target is, if you take that, then make that yellow, go to settings, control V text, make that yellow, and then talking AB equals CD 3.618. There we go. Mid of the range plus wave structures lining up. Want to see some sort of bottoming structure come out here. So I wouldn't bid right now, but let's say you get a wick into here, you get some sort of raid, and then you start getting reclaims. On that reclaim is what I'd be interested in, to actually look at this as a potential bottom for Farcoin. So we can, I'll keep that on for now. But yeah, in terms of confluence, like you've got, I can see one major confluence here, final, which is this. But if this is lost, then I think, yeah, you just go and rate the lows and maybe even get this back at, you know, I don't know if you go back to this low, but definitely around 14 cents, very possible, below 26. Near enough a 50% slash in price, which is why I'm saying don't enter this yet. You don't have any way to manage your risk here yet. Okay, because the retest wick hasn't come in yet. Once the retest candles come in, then you can use that plus previous deviations to manage your risk and enter. Right now, all you have is previous deviations, so it's a gamble which one you go for. Right, it's just gonna, you're asking to get stopped out for no reason if you just blindly enter here now. Wait for structure. But Farcoin at a very interesting area for sure. I'll be keeping an eye on this level. But yeah, MKR. But apart from that, it's like, you know, many of these, I think Rune's close to a bottom, to be honest. We've looked at Y before, right? Anchor still holding the key area, you can see, right? This alt, even though you know, some things are chopping, this is literally just going sideways at the trend, holding a key area. We looked at ENA. Cetus, I'm hoping for one more drive down to that 886, right? Give us that B point, 886 target. Flip it to support. If you missed the initial move up, nearly 573%, right? This was from September entries. You're getting a chance to re-enter this, right? And again, why do I like Cetus? If you like Uniswap for Ethereum, right, and you believe in SWI and you believe in Aptos, what Uniswap is to ETH, Cetus is to both Aptos and Sui, right? And personally, I believe both Aptos and Sui as parent chains will do very, very well. So of course, the number one DEX for both of those chains together, not just one, both of them together is going to do well. This ran up this hard because of course Aptos was green and Sui was green, right? So Cetus absolutely ran up this. Now, if Aptos and Sui absolutely go into price discovery, don't think Cetus is just going to sit in these prices. This will get bid back up, okay? So if you're looking for a DeFi project now, right, you're looking to diversify a bit, getting a hand on a layer 2 DEX, Cetus, and you're looking for especially a new one, right? So of course Uniswap is good, all of these are good, but they've had their big runs, right? You're looking for a new one that hasn't fully gone into euphoric price discovery yet. Cetus is a good one, okay, which is why I've got this under my DeFi. Cetus is. So just keep an eye on this one. We looked at GMX, we've looked at ARB, right? So all of these below resistance. So you're not sizing up any more than whatever you entered at the liquidation wicks. LDO still holding so strong, right? Which is why again we've talked about this play for a while now. LDO, like, I don't need to do anything fancy. I just need to put one line on, and that's this one here. Like the line you might change depending on which one you view as the key support. Doesn't matter. What's important is the area. Support, support, turn to resistance, support, right? Support, 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 turn to resistance, back to support, right? Ultimately, what we have here is a cumulative structure being attempted, right? So you have initial smiley faces, so on and so forth. You have your left eye, you have you have your lips, you have your right eye. As long as this holds on LDO, ultimately you're looking to reprice higher. And LDO held this, didn't lose structure, like I keep saying, when Ethereum did, right? So the parent chain lost structure, but this didn't. I know I keep saying this, but I'll say it again. Don't be surprised if there's some absolutely bullish news that comes out of nowhere for LDO, right? Because with the chart looking like this, either this thing's just gonna absolutely nuke after baiting a load of longs, right? Or the more likely scenario, which might as well just go for the one that's more obvious in terms of TA, is some good news is gonna come out and now you're just gonna expand to the upside, right? Which is what I'm hoping goes for. Um, of course, we can't predict what type of news is going to come out, but I would not be surprised, I'll repeat, if there is some really good news that comes out of LDO. Now, there could be absolute dickheads and release the most bearish news you've seen, right? To absolutely FOMO and stop out anyone that's building longs here, and in which case, I'll be looking at all the way down over here for LDO. But there's no point thinking about that, right? In terms of structure, LDO looks good. So I'm hoping whatever news does come out eventually is going to be good. But this looks absolutely amazing. LDO looks good. For my main ETH beta play right now is just LDO. LDO, OP, whatever's here you see, LDO and OP mainly. GMX if you want a layer 2, again, ARB, so on and so forth. But LDO, in terms of structure, LDO looks the best for ETH beta play.
Brother, that New York sell-off was horrible.
Let's take a look. BTC. Oh yeah, straight to the red. I can see that.
Like $600 on Bitcoin's price.
High volume sell-offs. Was that aggressive?
God damn.
Loads of market longs came in here. They just got absolutely wrecked. Jesus Christ.
Yeah. I saw Sherlock call along on ARK earlier. I looked at the coin. I was like, this looks like it's had some scam pumps. I'm good longing this now.
ARK.
Fuck it.
I'm not sure
Yeah,
what that is.
ARK.
Let's take a look. Focus. ARK. Okay, I'll just go with this. And then Binance BC, Cosmos and Gate. Okay, nope, nope, nope. These are my old charts, old charts, guys. You can probably tell, but back in the 12 months, what happened in 2024? Okay, so there's your 2024 buyer zone. Okay, so you flip the 2024 buyer zone into support, and then you went up. Where we currently are on ARK, the way I see this. No, not even that. I'll do this. It's your seller zone. I mean, if you wanted to attempt one, I suppose I could see why he took it. Especially if you do get one slight pullback towards this area, you can manage your risk quite well.
Yeah. Like, don't get me wrong, you have that support zone between like 42 cents to around like 31.
Yeah,
That liquidity pocket, very wide range, I know, but I guess that's where we pumped before so many times, right? We had that massive scam wick
yeah, yeah,
on
exactly.
on
So I'll
Sunday,
do
Monday.
this to be honest. Even that would be fine. But I'm
I
not
mean
really sure what
that
this
wick
project
is
is.
that wick is crazy.
It is.
80% right?
It is absolutely nasty. I'm guessing this is a low cap, just because of how the chart looks.
Yeah, yeah, I
Yeah.
assume so.
I think you're probably you're probably better off. Only get into projects like this, guys, if you have the spare liquidity. If you're actually planning to build a solid port, right? In my opinion, right now you're going to be better off focusing on. Just go to CoinMarketCap and look at the top 100. See once if you want to go a bit further out the risk curve, look at number 99 or whatever. Otherwise, the ones that will catch rotation to begin with, right? That you can still make some really good money on if you size it properly. Is going to be coins like Doge. You know, it's going to be coins like AVAX. In my opinion, these are the ones where for a solid port, probably better for most of you to be focusing on those, right? Do this with less liquidity. I'm not saying don't trade coins like this, but I'd say do so with less liquidity, unless you're some sort of low cap expert, in which case don't let me tell you what to do. But for the majority of you, only put liquidity in this which you're willing to lose, right? I pretty much look at these the same way I would meme coins in a sense. Um, if you can manage your risk, just size up appropriately. Like so areas like right now, if you wanted to enter, like yeah, you can very easily do so. But especially ones like wicks like this come in, it becomes very very hard on coins like this to manage. Let me check the chat. Okay. Anyways, do you guys have any questions about anything we went over today? If not, I'm gonna get off and get some food. It's been a couple hours. I've not had anything yet. Right. Okay. Well, in that case, I'm gonna get off. You'll catch me. If something crazy happens and there's a free slot, I'll stream again. Otherwise, catch me next Tuesday again. I'll put this on YouTube. So thanks guys for popping up like usual, and I'll talk to you guys soon. Yeah. Thanks, Caleb, bro. It's nice catching up with you.
Okay. Thanks, brother, man. Take care,
Yeah.
brother.
Take care, bro. See you soon, man.